This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Donald Trump needs a weak dollar.
Have we achieved a soft landing? Has the Fed kind of done its job?
With Lisa Mateo on markets.
The economic calendar jam-packed today.
And Michael Barr with news.
Fears over a broader regional war in the Middle East.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Tom Keene, Paul Sweeney, Michael Barr, Lisa Mateo. Let's pause. Everyone here today.
Yes.
We're here. Lisa Mateo here. She'll be here in moments. Michael Barr wearing black for the Detroit Lions today. And we'll move on from there. Equities, we're up. Brian Belsky to be with us later. Paul, is it a melt-up? I'm not there yet. I'm not calling it a melt-up.
The animal spirits are out there, Tom.
They are, yes.
Over the last several days,
First
you
question,
kind of feel it.
First question to Torsten Slok.
Absolutely.
Just what you said.
So we got positive futures here today. We had the stock moving higher yesterday. Again, we're starting to get into some of the earnings. Netflix had some great numbers last night, so they're doing just fine. So again, the focus is on earnings here.
But Delta earnings,
yeah,
United
exactly.
Airlines.
The airlines
earnings.
Packed, absolutely, Tom. Some good numbers coming out of the airlines. People are still flying all over the place.
Julian Emanuel with his first note from Evercore and talking about, solid earnings growth. That'll be one of our themes. Gina Martin Adams with us as well. We start strong in moments with Torsten Slok. Futures up 28. The VIX under 15, not really depressed to a quiescent stage, but nevertheless 14.90 on the VIX. Gets my attention. From the Interactive Broker Studios, the Bloomberg Business Flash, Lisa Mateo.
And we've got futures advancing this morning. This is following big gains for stocks yesterday after Donald Trump's return to the White House, but also strong earnings. Speaking of which, Paul mentioned that Netflix, a huge part of that, their shares up 14%, closed out 2024, its biggest quarterly subscriber gain ever. It also said it's raising the price of its U.S. subscription plans on top of that. Now, also after the close yesterday, blowout earnings from United Airlines last quarter, strong demand for business class international travel. Its shares up more than 3%. Big week for airline, though. Delta, American, Alaska also reporting this week. Today, we have earnings continuing. Johnson & Johnson, quarterly profit, topped estimates. Strong cancer drug sales. Its shares right now up about 0.1%. And then finally, Procter & Gamble up more than 2%. Organic sales surpassed estimates. So futures, NASDAQ futures up 0.8%, 182 points. Dow futures up 0.2%, 123 points. S&P futures up 0.4%, 27 points. We have the two-year yield at 4.27%. That's little change. And the yield on the 10-year, 4.58%. And that is little change. The Bloomberg Dollar Spot Index down about 0.1%. And have to point out, Bitcoin, it's down about 1.5%, but up above 105,000.
Wow.
That is your Bloomberg Business Flash. Paul and Tom.
Yeah. Lisa, was it cold or hot down south?
I was in Florida, and I was wearing my North Face coat.
Oh, jeez. That's not what you paid for.
At a softball field. It was about 48, 49.
Oh,
50.
softball.
Yes.
This is where it's a week trip and it's 4 days long.
Oh, and you just sit at the field and you just sit there and freeze. Yes.
Good to have you back. Lisa Mateo with us right now. This is a joy. We start strong with an extended conversation with Torsten Slok of Apollo Global Management. And what's great about him is I can audible 4 or 5 ways, and I do so off a memo he just put out, which goes into my question of animal spirits, nominal GDP, and part of that is the demographic overlay over our societies, plural. Torsten Slok. China's working age population is declining. America's working age population is growing. Discuss, Torsten, that's the heart of the matter, isn't it? We've got a lift, they don't?
Absolutely. So China is facing 3 headwinds. Demographics, because of the one-child policy, is beginning to catch up. It is going to be a significant headwind over the next 10 years. The United Nations is forecasting that the working age population today, which is about 1 billion people, will shrink over the next 10 years to 900 million. In other words, that's 100 million people fewer working in factories, working in the service sector, also 100 million people fewer paying taxes. That is a significant Japanese-style headwind to growth in China over the next several years. Likewise, China is facing some headwinds from a deflating housing bubble. And of course, China is also facing some headwinds from a trade war with not only the US, but also with Europe. And that is indeed some very idiosyncratic sources of why China is weaker than the US is at the moment.
So, Torsten, I think over the last 20 or 30 years, hearing what you just said about China weakening, that would be a real challenge for the global economy. Is that still the case?
That is exactly right. And that's why this has some very important implications. Remember, historically, in the last 15 years, China has accounted for half of all demand for commodities. So first of all, commodity prices are under pressure simply because growth is slowing down in China. Again, partly for demographic, meaning structural reasons, but also for some cyclical reasons that have to do with housing and have to do with the trade wars, both again with the US and Europe. So demand for commodities globally looks a lot weaker across the board. And also remember that Germany is a huge exporter to China. So that also means that Europe is unfortunately also hard hit by this idiosyncratic shock of China slowing down. So it does have some important implications for commodities and the global business cycle.
Torsten, going back to your Excel spreadsheets at Deutsche Bank, can you model out a 5% growth in China? Can you model out a solid Pacific Rim economy?
Well, the challenge is, of course, that if growth is gradually slowing in China, then it will have implications not only for, of course, for commodity exporters and not only for Germany, but also for the neighboring countries. Let's not forget that a significant part of global trade is intra-regional trade flows between China that produces some parts of a good that then is exported to Indonesia, to Vietnam, to Laos, to Cambodia, and then finally ends up being consumed by a consumer in Europe and in the US. So it does have negative implications also for the rest of Asia.
Torsten, I want to talk about what we're witnessing right now. Paul and I were talking about it this morning. Folks, we had a 3 a.m. meeting this morning. Even Lisa attended. My head is spinning with Trump's second administration news. Do you, and frankly, do all of Apollo Global Management, see a cohesive plan here that lifts the American economy, or is it so ad hoc you can't come up with a theme?
Well, I do think for markets, there were obviously a lot of executive orders, and trust me, we studied them very, very carefully because, of course...
Whoa. Has Mark Rowan ever done an executive order at Apollo?
Well, the executive orders here, of course, for us in markets is all about trying to figure out what are the implications for macro. And I do think there are 3 areas where things will have implications for macro, and that is tariffs, of course. It is about immigration, and it's also about potentially lowering corporate taxes for domestic manufacturers to 15%. If you impose tariffs, it's inflationary. If you restrict immigration or do deportations, it will also be inflationary, in particular in the sectors where the 11 million illegal immigrants work. According to Pew, they work in agriculture, in construction, and in services, including restaurants. You will see wage inflation in those sectors if you do serious deportations and if you do serious restrictions on immigration. So both tariffs and restrictions on immigration will probably have some lift to inflation. And the problem for the Fed and for the economy and for markets is that inflation is already around 3%. We're just not quite yet at 2. We're more at 2 than when we were at 9, but we're still not quite at 2. So if you now add policies that run the risk of lifting, even modestly, inflation, it unfortunately is because the starting point at 3% is just creating all these problems in long rates. And of course, also all these problems for the Fed.
Jamie Dimon is speaking in Davos as we speak, Torsten, and he's out there as it relates to tariffs. While tariffs may cause some inflation, he views them as an economic weapon. Are they a valid economic weapon, do you think?
Well, I mean, whatever the exact motivation is and whatever the exact outcome will be, it is absolutely clear by definition that if you raise the price of all goods that come from China by 60%, and therefore everything that we buy in the supermarket will increase in very round numbers by 60%, it will have a direct hit to inflation. So to what degree we get that, and now Trump talked about also that we might get before the end of next week some tariffs, 25% on Canada and on Mexico. It all remains to be seen exactly. Betting markets also have a view on whether this is happening or not. We study every aspect of this, and we try to exactly make an assessment of what's coming and what might the implications be. But the bottom line is that it will have some implications for inflation, and that's exactly why rates and the term premium have gone up so much, because the implications could potentially be quite serious.
Torsten Slok with us with Apollo Global Management. We welcome all of you on your commute this morning. Be careful out there. For much of the nation, 1977 cold. Good morning to Chicago, 7 above 0. On YouTube, subscribe to Bloomberg Podcasts after your commute, in your office, at your home. YouTube is the best way to get the handsome, tanned and rested Paul Sweeney, or the tanned and rested Lisa Mateo, or the pasty white puke Tom Keene as well. We continue with Slok of Apollo Global Management.
Torsten, let's step back here and just think about this U.S. economy. What are the biggest headwinds here? Because it seems like, certainly relative to the rest of the world, the U.S. is doing very well. What are some of the headwinds you see out there for this economy potentially?
Yeah, this is very important because if we just spoke about what the headwinds are to the rest of the world, namely China is slowing down, Europe, on top of China slowing down, is also experiencing some headwinds from energy transition. There's also some challenges with politics in Europe. We will have a German election in February. We'll have a French election in July. Of course, when they are settled, then we'll have some more idea about exactly what direction Europe is going. For the U.S., it is the case that at the moment there are actually some very unique tailwinds. First of all, U.S. consumers are not very sensitive to interest rate hikes. We just found out over the last 2 years that even though the Fed raised rates, because 95% of mortgages are 30-year fixed rate, it really ended up being that the transmission mechanism of monetary policy in the U.S. was quite muted, simply because consumers were locked in their mortgages at very low interest rates. Likewise, in the U.S., we now have a data center boom that is adding, in round numbers, around 0.2% to GDP growth every year. And finally, we also still have fiscal policy, even before Trump, coming from the CHIPS Act, the Inflation Reduction Act, the Infrastructure Act. So the tailwinds to the U.S. outlook are quite unique. So therefore, to your question, I see more decoupling where the U.S. is doing well because of some unique sources of growth in the U.S. And the rest of the world, unfortunately, continues to do less well because of some unique headwinds that are not headwinds to the U.S. economic outlook.
Torsten, it seems like almost a bipolar American economy. It is just so odd here how I guess we've got a consumption boom. I guess the haves do better and better. Do you see the compendium of statements by the new Trump administration leading to a broad economic growth? Or does it stay, and I'm using this term not medically, but does it stay barbell or bipolar?
You are absolutely right. If you look at delinquency rates on auto loans, delinquency rates on credit cards from the New York Fed, it tells you that younger people are falling behind at a pace that is faster than older people. And why is that important? Because when I'm young, I have more debt. I have more debt on my car, more debt on my credit card, more debt on my student loan. So that's why younger households are falling behind, because they are harder hit by the Fed raising interest rates. Likewise, you also see savings for low-income households are very low, whereas savings for high-income households are very high. So to your question, this bifurcated situation where high-end consumers are doing well and low-income consumers are facing headwinds, I think that overall, this, of course, economy, if we continue to create jobs, it will benefit everyone. If we do begin to see interest rates go down, we will benefit everyone, including low-end consumers who have more debt. So I do expect that a stronger economy is something that will be benefiting everyone across the income distribution.
Torsten, to tariffs and on the magnitude, Paul Krugman with us recently really discussed the harmlessness of 2 or 3% tariffs. Where is the Slok level where tariffs really begin to affect our culture and our macroeconomics?
Well, if you look at the Tax Foundation calculations, they show that if you do 60% on China and 25% on Canada and Mexico and 10% on Europe, you will see the level of tariffs go up in aggregate to 18%, which is the same level as we had in the 1930s, which of course was a very bad economic situation. So if you do get tariffs that are going all the way up to the highest levels of everything that has been talked about, then I do worry about what the implications could be. Because the simplest way that I think about it is that everything that I would buy in stores, if that goes up by 60%, and if my new car on average would go up by $3,000, if you have, broadly speaking, every good that we import goes up in price, it would certainly have the implication that inflation would be going up and demand, and therefore sales of goods that are imported, would go down. And the economy is just not able to quickly adjust and produce these goods at home. So that would run the risk, essentially, of creating inflation at the same time, also as a slowdown in GDP. So I do watch, and we spend quite some time looking at exactly at what are the implications and what areas is it where tariffs are being talked about.
Torsten, talk to us about the consumer here, right here. It seems like the consumer here in the U.S. has a job, wages are rising, maybe even rising faster than inflation. Talk to us about the U.S. consumer here.
Absolutely. So if you on your Bloomberg screen type Red Book, same store retail sales, this is a weekly data series, you will see that the weekly data, which comes out every Tuesday at 9 a.m., is still showing a consumer that's growing at a very solid growth. The growth has been around 5-6% literally for the last 12 months. And this is on a weekly basis that compares same store sales for retailers this week compared to the same week a year ago. So in aggregate, consumption is very strong. Another good Bloomberg trip, if you type ECFC Go, you will see that what does the consensus expect for the consumer for the next 6 quarters? And the answer, Paul, to that question is also that we should also expect to see the consumer continue to do well simply because of we still have tailwinds from high rate wage growth and still strong employment.
Dr. Slok, 20 seconds. Michael Barr wants to know, is the Fed meeting end of January going to be a snooze fest?
I think it will have a risk of being a snooze fest. They have already signaled, and markets are pricing a 98% likelihood that they will do nothing. But the challenge, of course, is, as usual, the press conference. What will Jay Powell say?
Okay.
All these risks that we're talking about here, it's really complicating the Fed's job very significantly.
Torsten, thank you so much. Your notes in the morning and along the day are hugely valuable to all of us on Team Surveillance. Mr. Slok with Apollo Global Management. Did you see the temperatures up north?
Yeah, I mean,
I looked at Millinocket.
Yep.
Is like 15 below zero.
Yeah, I mean, but I feel like the people up there, they're hardy souls. They can handle that.
They're like Michael Barr.
I'm thinking about our
like
friends
us.
down in the Panhandle.
It was -9 as I was driving in.
-9 as you were driving in?
As I was driving in. That's not real feel. That's that was the actual temperature.
Bretton Woods near Mount Washington, the Mount Washington Hotel, -9, -13. Wow.
I was in Florida. They were talking about opening warming centers because it was 49 degrees.
Is it like LA where if it goes below 60, the ladies pull out their mink stoles?
No.
We will see. We say good morning to all of you. A really spectacular set of conversations today. This was Futures up 29. With our news in New York City, a toasty warm Michael Barr.
Thank you very much, Tom, Paul, Lisa. On the heels of President Donald Trump's executive action to end birthright citizenship, more than 24 states, attorneys general, and other organizations like the ACLU have filed a lawsuit challenging the new administration's actions. Cody Wolfsey is the deputy director of the ACLU's Immigration Rights Project.
This is really an incredibly devastating threat that's now hanging over thousands of families, that their children are going to be denied their rights as citizens, have all sorts of opportunities stripped away from them.
The ACLU's Cody Wolfsey says birthright citizenship is a right protected under the 14th Amendment of the Constitution. President Donald Trump's administration is moving to end affirmative action in federal contracting. In executive orders, Trump is also directing that all federal diversity, equity, and inclusion staff be put on paid leave and eventually be laid off. A victory in court today for Prince Harry. Media mogul Rupert Murdoch's UK tabloid newspapers settled the prince's privacy invasion lawsuit for an undisclosed substantial sum. Prince Harry's lawyers said news group newspapers offered a, quote, full and unequivocal apology for the serious intrusion by the Sun between 1996 and 2011 into his private life, including incidents of unlawful activities carried out by private investigators working for the Sun. Prince Harry's lawyer, David Shearborn, read a statement on behalf of the prince outside court in London this morning.
News UK is finally held to account for its illegal actions and its blatant disregard for the law.
Attorney Shearborn called it a momentous victory today. A winter storm that dropped record-breaking snow in New Orleans has spread into Florida and the Carolinas. Meanwhile, a blast of Arctic air has also plunged much of the Midwest that we were talking about and the eastern U.S. into a deep freeze. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr. This is Bloomberg. Tom, Paul, Lisa.
Michael Barr, thanks so much. We thank our guests for reporting in. Jennifer Lee, Bank of Montreal. First of all, she's got a daughter in a math program. I'm shocked. Were you in a math program,
I was
Paul?
not. No.
I was not in a math program. Actually, I had a tutor in English. It was so fractured. But she's with her daughter in a math program, and Jen Lee's walking around last night 4 below zero.
No, thank you. Yeah.
You know,
Well, they're Canadians. They can handle it.
she probably said to her daughter, if you don't do your multiplication
Right.
tables, you're walking in 4 below
Walking
zero.
home.
We'll have
Exactly.
to see. Really, Michael Barr, 9 below zero?
Uphill both ways. Yeah, it was. I mean, I couldn't believe it. I had to look at the temperature
Right.
again on the car. I'm like, no way. But yes, it was. It's
I
just
was
as you
just-
cross into New
lives in-
Jersey.
He
Just
lives in the
looking
house.
up on Wikipedia, the year 1977. It was
Yep.
it was like 40 days in a row where it never got above whatever.
Right.
It was like a cold like we never. I guess that's where we are now. How long does this last? Anybody know?
I don't know. Well, I think we warm up a little bit this weekend.
Yeah, I think we get through it.
A tad.
Please stay warm out there on your commute on Apple CarPlay and Android Auto on Sirius XM channel 121. Thank you so much for joining us this morning. 99.1 FM in Washington, up to 92.9 FM in Boston. Good morning to you. And on YouTube, subscribe to Bloomberg Podcasts. This is Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We've got tech futures powering ahead as President Trump's AI push offset those tariff threats. SoftBank, that'll help lead a joint venture called Stargate. Its shares are up more than 10% in Japan. Then you have Oracle, which is an equity partner in Stargate, up about 8%. Though NASDAQ futures up 0.8%, 189 points. Dow futures up 0.3%, 167 points. And S&P futures up 0.4%, or 28 points. The two-year yield, 4.28%. That's little changed. And the yield on the 10-year, 4.58%, and that is little changed as well. To commodities, gold rose to its highest in 11 weeks. Investors kind of weighing Trump's tariff and tax policies. Right now we have spot gold at $2,754 an ounce. And oil right now, Brent crude $79 a barrel, WTI crude $75 a barrel. And we have the Bloomberg Dollar Spot Index. That is little changed. More earnings news coming in. We have Abbott Laboratories forecasting profit for 2025 in line with estimates. The company said strong demand for its medical devices. That will continue to drive growth, but its shares down about 1%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Lisa Mateo. That is the Bloomberg Business Flash. Paul and Tom.
Lisa Mateo, thanks so much. Futures up 20 now, up 28 as well. Dow futures up 168. When the facts change, they will change. The facts have changed in Washington. What does it mean across EM, across the Pacific Rim? Frankly, what does it mean for Mr. Putin and Russia? Hugely qualified to answer these questions. Dirk Willer joins us right now with Parchment from LSE and St. Gallen in Switzerland, and of course holding court at Citigroup this morning. What are you telling Jan Fraser? Thumb up on global growth, or is the president going to derail the global growth vector?
And overall, we are relatively positive on global growth, but a lot will come from the US. There is a flavor of US exceptionalism out there for sure. And the measures the new administration is taking is, of course, quite positive for the US. It's not as positive for the rest of the world. So that
Right.
is clearly happening. We really have to see to what extent it's happening, though. I think there's a lot of uncertainty what precise policies
Right.
are going to implement. And my head is already spinning just after the second day of the administration.
Exactly. Back to Robert Mundell, Jacob Frankel, on to Ken Rogoff appearing in Davos yesterday with Bloomberg. Currency is a transmission mechanism. Currency is how things recalibrate. What do you expect the currency market to indicate?
we still broadly expect a stronger dollar. But I think what happened was the market went very long dollars into the inauguration. And part of that was the fear that we would get strong tariffs on day one. Now, we didn't get that. We also were fearing universal tariffs, maybe on day one, meaning really across the board tariffs. And if you read the executive order on tariffs, it doesn't smell like universal. It smells like negotiated country by country.
Well, very quickly, Paul wants to get in here, but this is too important. Ian Lingen, moments ago at BMO Capital Markets, says everybody's forgetting the timeline to implement tariffs, the process. Paul, this really hasn't come up yet.
No.
How far, if we go 10% tariffs, February 1, when does that click in?
Yeah, I mean, there's a big question whether February 1 is the right date, right? I mean, the executive order mentions April 1st to finish all the studies to get the tariffs on the way. So February 1 is quite aggressive, and I think the reason why the Mexican peso is not selling off as much is the market is a little bit doubtful that we get something on February 1. Having said that, if we were to get it faster than this April 1 type of deadline in the EO, then, and if we get the 25%, then these things could, certainly from the market's point of view, happen very quickly. The market will not wait for the actual tariff to be implemented. The market will move when there's clarity. Right now, there's not a lot of clarity. Will we get universal? Will we get specific? And so forth. I think the market is well priced for specific tariffs. Citi, for example, believes that overall the tariff in the US will go up by 5 percentage points broadly, which is 10 to 15 for China and less for the rest. If you get the maximalist type of numbers that Trump threw out there, the market is not prepared for that, and then we have to see aggressive moves. And that would mean a much stronger dollar.
Dirk, we were just, Tom and I were just talking to Torsten Slok over at Apollo, and he was really painting a cautious picture for China as it relates to some demographic issues with their population, the housing market concerns, the potential tariff situation. What's the Citi view on China these days?
Yeah, we have that too. We had 4.2% growth, so meaningful slowdown. There are, of course, two question marks to see just how bad it's going to be. One is the extent of the tariffs, and the second one is what will China do in response, right? There have been many, many expectations that were dashed time and time again about this big Chinese bazooka coming, and we haven't seen it, and we think they will stay gradual. And that the combination of meaningful tariffs and a gradual response by China to us still means that that growth will have to come down, and that's why we're sitting at 4.2%. The two tail risks to watch, as I mentioned, the tariffs and the response.
Where, as you start 2025, we have this new administration, we have some sense of maybe where they want to go with economic policy. How's your asset allocation changed at all over the last couple of months since the election?
Yeah, I think the main negative that could come out of the Trump administration really is this tariff question. There's a strong sequencing of the Trump trade, if you like. The first part of the Trump trade was just, hooray, we get deregulation, we get maybe a tax cut, bullish growth, let's buy the equity market, right? And that phase then is switching over into, oh, there will be tariffs. Could that be a problem? Right. And we are now in this transition phase. And a lot will depend on whether we get these broad tariffs or not.
It's away from your remit, but we've got earnings, we got revenues, I got Netflix coming in, and the rest. In your world of EM, are they seeing surprising growth on a relative basis like we're seeing in the United States?
I think it's more about the US. I think really for the rest of the world, you do need, I think the tariff threat is asymmetric, right? It depresses animal spirits in the rest of the world, but it raises animal spirits to some extent in the US, although that is more the tax cuts.
Okay, but just take Singapore. Just take Singapore as an example. Do we lowball Singapore where they actually do better than the consensus feel?
I mean, everyone in Asia in particular, actually Europe and Asia, both have a target on their back in terms of tariffs. Right? Singapore is maybe not the best example because they don't have a big trade surplus with the US. But if you read the executive order, everyone with a big trade surplus is at risk. And that includes not just China. That is Japan, that is India, that is Taiwan, that is South Korea. Right? And so there are two channels how that works. One is ahead of the tariff, people are, animal spirits pull back really in all these places. And then if the tariff actually comes, of course, it will get much worse. But at this stage, I think it's hard to believe that any EM equity market will outperform the US given the tariff threat.
How do you feel about just Europe broadly defined? Because again, I look at Europe and I see, boy, the headwinds there. Just take Germany, for example, the strongest economy in Europe. They have such a strong trading relationship with China. And if China is in fact slowing to the degree we think it is, what is Europe broadly defined? How do they perform?
Yeah. Europe is a terrible story with the main question mark, is it fully priced or not, right? Okay. Because it's also a story we have been telling for a long time. So we actually had Europe as an underweight for a long period last year, and we brought it back to neutral just because sentiment got quite extreme. But you're right, fundamentally what's happening is you get shot at from all sides, right? You have the shots from the Trump administration, you have the diversion of the Chinese exports. If they can't go to the US, they will go to Europe. So you have plenty of negative factors that all come to Europe, but investors were really very, very negative. And I think what we're seeing right now is a little bit of a relief trade where tariffs did not come in full force. Europe wasn't even mentioned in the executive order. Interestingly, right? Canada was mentioned, Mexico was mentioned, China was mentioned. No direct hit at Europe from that.
We got to get you back to talk about Switzerland. Dirk Willard, thank you so much. Hugely valuable with Citigroup this morning. Really the landscape there of EM and the rest, given what we'll see from Trump. But I don't have a schedule today of the president. We're waiting for that. Hani's in charge of that. We'll see if we get that. I don't have it yet, but there it is. Futures up 29. They advanced. I don't want to oversell it. Up 23 earlier, but there is an oomph to the market right now. And the VIX comes in to a new 14.83. So that's a good number as well. The 10-year real yield, 2.17%, sort of churning there. Not a lot. Is there economic data today, Paul? I didn't even look.
There's nothing on the major. We got some mortgages, applications.
Nothing.
So nothing really big. Tomorrow we get the initial jobless
claims.
We
get
manufacturing
PMIs.
Yep. UMich.
Do we care about UMich?
I care about UMich. I know Ohio State University cares about the University of Michigan.
We don't have an Ohio State sentiment index.
No, they're national champions, so I think they're feeling pretty good. But I think the coach is still under pressure, even though we won a national championship, of not beating Michigan.
Existing home sales, come on, where mortgage rates are.
No, forget it.
With this cold, what do you do as a realtor?
Oh, boy. It's a tough business since the last couple of years.
We'll have to see, but we're with you here through the morning with great conversations. For those of you in the stock market, we have back-to-back Gino Martin Adams and Brian Belsky. Really strong to have them on today. Belsky's absolutely nailed the bull market call. Lisa mentions BitDog, the Alex Steele Hour at 10 o'clock with Paul Sweeney. Bitcoin, $105,000.
Yeah, why not?
Well, exactly, why not? On your commute. And on YouTube, subscribe to Bloomberg Podcast. That helps us. This is Bloomberg Surveillance. Good morning.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We've got futures rising, signaling that the strong Wall Street rally of the past two sessions remains pretty much on track. We've got NASDAQ futures up 0.8%, 191 points. Dow futures up 0.2%, 119 points. And S&P futures up 0.4%, or 27 points. The two-year yield at 4.27%, little changed. And the yield on the 10-year, 4.57%, and that is little changed. The Bloomberg Dollar Spot Index is little changed as well. We do have more economic data. U.S. mortgage rates dropped for the first time in 6 weeks. MBA said the contract rate on a 30-year mortgage, well, it fell to 7.02 last week, and that really helped keep that gauge of home purchase applications up at a one-year high. Later this morning, a read on leading economic indicators from the Conference Board. We have initial jobless claims tomorrow. Few stocks on the move. Two of them, we'll start with computer hardware and storage company Seagate, up 6%. Reported second quarter earnings and revenue beat estimates. And finally, shares of Trump Media and Technology. They're down about 1%. Shares really struggled since President Trump's inauguration, dropping about 11% yesterday. That is your Bloomberg Business Flash. Paul and Tom.
Lisa, thanks so much. Paul Sweeney and Tom Keene here, looking at economics, finance, investment, international relations, sum total it all, including all of the changes within the second administration. And you look at the global litmus paper of the system. We're going to do a really basic discussion here right now with Jane Foley. She's been fabulous at Rabobank. They're huge commercial interests of people hedging to protect their commercial transactions, and also, of course, the speculation of what you can do in foreign exchange. Jane Foley, you come in the morning, you crank up the Bloomberg. What's the first currency pair you look at, and why?
Well, it's got to be euro dollar. Clearly, that's the one that really is, I think, the window of the world. It's got such a big breadth in terms of the flow that we see through euro dollar. I think often just by looking at that currency pair, I can have a pretty good guess as to where other asset prices have gone overnight. So, yeah, euro dollar is the big one for me.
Is there a bet in the market on this? I'm thinking of the way Paul Sweeney plays the market. He's large on Netflix, etc. Is there a game? Is there a bet right now on the euro pair?
Oh, there's always a bet on the euro pair, and I think really the question mark is how far back can euro dollar go? How far can the weakness that we've seen this week in the dollar extend? And I would just say right now, I think all we can describe it as is a pause for breath. I don't think we've got a bearish case for the dollar at all, but we do have a case just to maybe take some of those longs off the table. After all, I think since beginning of October, on the anticipation of a Trump victory back then, and then subsequently on anticipation of what sort of policies Trump would bring, we've had the market pricing in an awful lot of positive dollar news, and I think the whole world and his dog have become bullish on the dollar. So a little bit of pausing for breath. Tariffs did not happen on day one. Yes, there's talk about them, but we didn't get them on day one. And really, the longer we have before those new tariffs, well, the longer it is before U.S. prices are hiked. And therefore, the more breathing room the Fed has.
So, Jane, I mean, you're right. Since President Trump's inauguration, the policy pronouncements, the executive orders have been coming fast and furious. How has that been reflected in the currency markets here? Are people just taking a safe haven in the dollar, or are they trying to place some bets out there? What are you seeing on your desk?
I think it's mainly the bets, if we want to describe it that way. But, what we have had really fundamentally in terms of the dollar from the anticipation around Fed is this bet that his policies would be inflationary. So we're talking first of all about tariffs, but also things like looser fiscal policy, which can take some time. We're also talking about immigration, for instance. If there are mass deportations of undocumented migrants, well, yeah, that can lead to some tightening in the labour market, particularly in sectors such as agriculture, also maybe construction as well. But that could take some time to come through too. So the market, I think, was fundamentally focusing on whether or not there would be tariffs on day one, and not just the size, of course, of these tariffs, but also exactly when they would be implemented. And that is what we haven't had this week.
Jane Foley with us at the Rabobank. We continue with her here. Paul, quickly, futures just ticked to plus 30.
Yep.
Dow futures plus 128, the VIX 14.80.
Jane, what we haven't seen yet, I guess I'll have to underscore yet, from President Trump is discussion about Japan and tariffs. How do you think about Japan and the yen trading here at 150, just under 156?
I think this is good news in terms of no news is good news, because clearly there are an awful lot of Japanese auto exports still to the US. That's their biggest export into the US. That is expected to be in the line of fire. But, if we go back to Trump's first presidency, there was a trade deal done with Japan. And according to one of the ministers recently, I haven't read it myself, there was an annex on that which said that the current tariffs that the US has on Japanese autos could actually be taken off. And so the remark that we had recently from one of the Japanese ministers is that the negotiations that would potentially start between Japan and Trump would be from that basis, with the understanding that some of these tariffs could be rolled off. Now, that seems very much out of context, but we do have to also understand that whilst there's been a huge amount of trade friction between Japan and the US from the 1950s, particularly in the 80s and the 90s, about autos and semiconductors, geopolitical relations between Japan and the US have really come a long way, and that could certainly ease the way for some of these negotiations between Japan and Trump, particularly when you bear in mind that Japan is the biggest holder outside of the US of US treasuries and the biggest provider into the US of foreign direct investment as well.
Jane, thanks for the brief always. The euro 104 right now, 104.36. Jane Foley is with Rabobank. She was talking Japan Kyoto, which is spectacular. Yep. 42 degrees this morning.
Okay, balmy.
It's balmy. It's going to get up to 57.
Okay, that's
tomorrow.
More like it. Yeah,
57. So I just want to get some warm air in there, amid the big freeze. Futures up 30. Now futures up 126. Nice lift to the markets. Some of those earnings, wow. We'll talk to Paul about Netflix here in a bit. With our news in New York City, Michael Barr.
Thank you very much, Tom, Paul, Lisa. The fallout continues for President Trump's pardons for January 6th rioters. At a White House event last night, reporters asked President Trump on his first full day in office about the pardons. The president said he found their sentences excessive.
These people have already served years in prison, and they've served them viciously. It's a disgusting prison. It's been horrible. It's inhumane. It's been a terrible, terrible thing.
President Trump has announced a new investment push for artificial intelligence. Bloomberg's Amy Morris reports from Washington.
The initiative is led by SoftBank, OpenAI, and Oracle in a joint venture worth billions of dollars. President Trump.
It's the largest AI infrastructure project by far in history, and it's all taking place right here in America. I'm going to help a lot through emergency declarations because we have an emergency. We have to get this stuff built.
It begins with an initial $100 billion investment, which could scale up to $500 billion over the next 4 years. The initiative is called Stargate. It aims to create 100,000 jobs focused on AI and related infrastructure, including investments in data centers, semiconductors, and energy. In Washington, Amy Morris, Bloomberg Radio.
An Arctic blast continues for much of the country today, including unprecedented conditions for the Deep South. People on the Gulf Coast are digging out after a winter storm that set an all-time record. Beaches in Alabama blanketed in snow. Louisiana sent out its first ever blizzard warnings. Meanwhile, parched Southern California could get some badly needed rain this weekend to dampen the prospects of another round of deadly wildfires. Global news 24 hours a day and whenever you want it with the Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Paul, Lisa.
Thanks, Michael. Robert Fishman to join us here in the next hour on Netflix. Let's get out front with the expert, Paul Sweeney. Paul, Netflix craters worse than COVID in the spring of 2022. We've popped 422%. Is what my eyeballs are fading here. 422% off the crater in 22. Why?
Subscriber growth. The company's still adding subscribers. In fact, Robert Fishman, just read his note from MoffettNathanson. He started 2024 thinking Netflix would add 20 million subscribers. They added 40 million subscribers, so double what the street was thinking about. And this most recent quarter, which has the stock up 14% pre-market, is some sports stuff.
20 seconds. Why can't they copy them? They're a first mover, I get. Why can't there be Netflix do?
That would be Disney Plus. Disney Plus is probably the next one in terms of size and profitability. Then there's a big drop off. So everybody feels like Netflix is Netflix. Disney will get there, is getting there. And everybody else, we don't know.
I mean, you mortgaged the Vespa to buy this puppy.
Absolutely.
Unbelievable. Yep. We'll talk about Netflix in the next hour. Just extraordinary. Futures up 29, I should say. Stay warm. Bloomberg surveillance. Good morning.
Now, a look at the front pages. What's making news around the world? Your daily roundup of today's headlines on Bloomberg Surveillance with Tom Keene, Paul Sweeney, and Lisa Mateo.
Your daily look at the front page is the Lisa Mateo moment. It's brought to you by IBKR Financial Advisors. Switch to interactive brokers for lowest cost global trading and turnkey custody solutions. No ticket charges. There are no conflicts of your interest. Learn more at ibkr.com/RIA. Thank you, Interactive Brokers, for your support. On behalf of Lisa Mateo, what do you have?
Well, since there's been so much talk about TikTok, right? Who's going to buy it? What's going to happen to it? I found a little sidebar story from the Financial Times about the workers. Sources are telling them that the workers at ByteDance who relocated from China to Singapore, they were told in a memo that they have to pay tax to their home country. And if they don't, that they risk kind of losing that ability to cash out on the stock options. And stock options make up a big chunk of their paycheck. It's about 1,000 employees or so could be affected by it, but a tax difference could be as high as 21 percentage points depending on their individual salaries.
So if they move to Singapore, does that get around our angst about China? I would guess no.
I don't know. I mean, it's fluid, as they say.
Are you on, Lisa? Are you on the red whatever, the new
the
one?
red note? No, the red note? No, I am not.
Is the FAM?
No, the FAM has not switched. They're still on the TikTok. It brought it when it went dark. There was a bit of a panic.
There was a bit of a panic
with the children.
Do your kids hide that they're on TikTok?
My daughter did for a while.
Yeah, because kennel fees on TikTok like glued to it, and you know the dog takes the phone and puts it underneath the food bowl. Next.
Okay, this is China, right, trying to boost their consumer spending. So this was an interesting story about how it's welcoming back Hollywood movies in order to do that. So it's allowing foreign films to be screened, old and new ones, R-rated Hollywood movies, films from other countries like India, Japan that weren't allowed there before, but it's a lot more. And the reason is because when people go to the movies, they spend more. And a lot of their movie theaters, which I didn't realize in China, are located in shopping malls.
Right.
So people go and they just spend,
buy food,
and that's what they want.
Kind of stuff. And I'll tell you, this is a big deal for Hollywood because pre-pandemic, for big blockbusters, these $200-300 million box off, big spending things, it had to play well in China in order for it to really be globally successful. And then for the last 4 or 5 years, no, for a variety of reasons. A, the pandemic. B, China just cracking down. But now it's opening back up again, and that is huge for Hollywood because that's the second biggest box office outside of North America is China.
All right, and airlines, they had a rough 2024, as we know. But this is a Wall Street Journal scorecard that has a look into who came out on top. So they ranked about 9 major U.S. airlines. It included things like on-time arrivals, flight cancellations, delayed baggage handling, all of that. So at the top was Delta. It actually stood out in nearly every category. The only thing is that they had this data that went through only till May, so it didn't include the CrowdStrike outage and passenger complaints in there. So that wasn't affected, but it's the reason why they say their tickets are often higher than other airlines. But it was a close race. Southwest just 1 point behind.
Really?
Alaska Airlines came in third, and the worst was actually Frontier Airlines. Came in last place.
And my United sitting smack in the middle.
In the middle.
Okay.
Yes.
Very good.
So much of it to me is the airport. United you sit on the runway at Newark. I mean,
it's Newark, yeah.
It's like
it's
a
got,
two-lane
knock on wood, it's been better the last few times I've flown, so we'll see how it goes there.
Lisa Mateo, thank you for the news. Greatly appreciate that. The newspapers today, thank you, IBKR, for your support as well. Paul Sweeney and Tom Keene with a real equity bias here. Like, I guess Paul said it's not a melt-up. On futures level, we're not out to record highs. ATH is
right.
what the cool people say. You got to have a vest like Damian Sassower
Yep.
to say
bro.
ATH.
Got to be a finance
I
bro.
don't have that. It's cold out there. There's a heat wave up the Mississippi River. Memphis, 14 degrees.
Wow.
Versus 9 in New Orleans. A classic.
Saw the ghost of Elvis on Union Avenue, followed him up to the gates of Graceland, and I watched him walk right through. Now security, they did not see him, they just hovered around his tomb. But there's a pretty little thing waiting for the king down in the jungle room. When I was walking in Memphis, I was walking with my feet 10 feet off a beam, walking in Memphis. But do I really feel the way I feel?
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
What do you say to people scared stiff in cash?
We've got an administration, presumably, that will be pro-business, lower taxes.
With Lisa Mateo on markets.
AI affecting demand for cloud computing.
And Michael Barr with news.
The president is focused on geopolitics.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Paul Sweeney, Tom Keene, Michael Barr, Lisa Mateo. First time we're together in ages, it feels like. That is a good and wonderful thing. Lisa Mateo just back from the warmer climes, 9 degrees in New Orleans. I don't even know. Key West? Is it ever frozen? I don't think so.
Can't, no.
That's
too
far
the
south.
Panhandle, it's been darn chilly.
We'll see. It's darn chilly out of the market. Market lifts up 29. Now on futures, the VIX 14.84, dollar churning and weaker this morning. And of course, West Texas American oil 75.90. John Tucker reporting the Wawa report.
Yep.
A lift to gasoline prices.
North of $3. It hasn't been there in a long time. So
Yeah.
for the commuters out there, a little tough out there.
We'll have to see.
Plus the congestion tax, Tom. That's
Oh,
now
yeah.
part
How's
of the
that
game.
going?
I think it's.
I've
they're
seen
collecting.
a difference.
They're
I've seen a
collecting. Yeah,
difference.
they say
Are
so.
your trains busier?
I think they are a little bit, yeah.
Yeah,
I think
Joe
they are.
Weisenthal
Yep.
was heated that the subways are busier in New York. We say good morning to you across the nation and worldwide, of course, on YouTube when you're after your commute. Consider YouTube. I guess with the Rivian, you can watch us on YouTube, whatever that's about. Bloomberg Surveillance this morning. We're brought to you by Cohn Resnick Advisory, Assurance, Tax, Discover. Game-changing strategies to maximize value, optimize performance, and manage risk. Put your business at the forefront. And we thank Cohn Resnick for their support this morning. Lots going on here in the markets, a lot of good discussion. We're going to look at the economy and the Netflix here in moments. Netflix is maybe a bellwether for what we're going to see in tech coming up in the next 10 days. From the Interactive Broker Studios, our Bloomberg Business Flash, Lisa Mateo.
And we've got futures advancing. This is following those big gains for stocks yesterday after strong earnings. Speaking of which, Netflix, a big part of it. You said it. Shares up 14%. Record subscriber gains in the fourth quarter. More than double what Wall Street expected. And it said it's also raising the price of its U.S. subscription plans. Also, after the close yesterday, we had blowout earnings for United Airlines last quarter. Strong demand for business class, international travels. Its shares up more than 3%. Today, we have earnings continuing. Johnson & Johnson, better than expected quarterly revenue profit, higher sales of its cancer drugs, but shares are down 1%. Investors kind of focusing on a few headwinds for the company in 2025. And then you have Procter & Gamble, their shares up more than 3%. Organic sales surpassed estimates on higher volume. Let's start with NASDAQ futures up 0.9%, 199 points. Dow futures up 0.3%, 132 points. S&P futures up 0.4%, or 29 points. We have the two-year yield, 4.27%. That's little change. And the yield on the 10-year, 4.56%. That's down 1 basis point. We have the Bloomberg Dollar Spot Index down about 0.1%. And Bitcoin up above 105,000. That is your Bloomberg Business Flash. Paul and Tom.
Thank you so much. Greatly appreciate it. Michael Gapin joins now, Chief U.S. Economist at Morgan Stanley. Michael, we've got so much news flow that my head is truly spinning over what the Fed will do. How does the Fed digest these first days of the Trump administration?
Well, I think that the Fed digests it in I think what you and I are trying to do, which is to understand what might be coming, but not necessarily preempt that with actions today. So by that, I mean, they did meet in December, as we all know, and some of them started to factor in assessments of what policy decisions may be coming. But I think the trick for them is to not act in advance of those and try and understand what's coming and react to them in the moment. That's the tricky part. There's a lot of noise, a lot of potential ways these policies could go. But I think the right thing to do for them is to, be cautious and not respond in advance. Wait for these decisions to be taken, see how they're affecting the economy, and then react.
Right.
That, to me, is the trick.
You taught at the Kelley School at Indiana. So like the gentleman from St. Louis, you've got a real heritage of looking at the facts. And the fact is, any central bank is ex post. How after the fact is this Fed right now? Are they out to the summer of this year or even later this year before they get confidence to act?
I think so. The answer to that, honestly, is it depends on how quickly some of this comes. It's pretty clear we're going to get restrictive immigration policies right up front. That's actually continuation then of what the Biden administration was put in around the middle of last year. I think the real trick is tariffs. Do they come sooner or do they build gradually? I mean, our thought is tariffs build in gradually across the course of the year. They scale up slowly. That actually means the Fed could act in March and June if inflation keeps heading lower, right? So you don't act in advance of tariffs. You wait for them to be put in place. You wait to see how they affect inflation. But if tariffs come in sooner, Tom, I would say, they could be on the sideline now, and I'd say 2 to 3 months for that to show up in inflation, but 2 or 3 quarters for that to show up in activity. So the Fed has a timing problem on their hands.
I mean, Paul, to me, this is a huge deal. Like if somebody said to me in the blur of the news flow, I mean, think what Gura's been through in the last 3 days. But in the blur, the zeitgeist this morning is the when of tariffs.
Yep.
That's the mystery.
That is, Tom. And so, Michael, I guess one of the issues is, given the timing remains uncertain, as Tom said, how concerned are you about the inflationary pressures of some of these proposed economic policies, whether it be tariffs, whether it be immigration policy changes? How concerned are you about the inflation impact?
I would put us in the moderately to concerned, very concerned category. And by that, I mean, I think it's not a high bar to suggest that tariffs will halt the disinflation process. So even if you have confidence that inflation overall is heading lower, the Fed has its policy stance right, we think tariffs at a minimum will slow that process, if not halt it, for a period of time. So a gradual leaking of tariffs higher over time could mean that core CPI and core PCE move sideways for a long time. So the Fed may not be hiking in that world, but they're probably not cutting. We do think ultimately weakness in activity, lower trade volumes mean that a reacceleration in inflation is unlikely. So that's why we're mildly concerned in the sense I don't think there's a tariffs cause the Fed to hike rates story. Obviously, it's possible. We just don't think it will get that far. But certainly there's a world where the Fed's just on the sideline for an indefinite period of time as tariffs gradually get imposed on our trading partners.
And that was clearly, I guess, the message from the Fed last meeting. And a week from today, we will hear from the Fed once again. Do you expect that same type of message? We're going to be waiting on the sidelines, dependent upon the data?
More or less. I don't think Powell will be quite as definitive in saying, hey, we're on the sideline. I think, as I suggested earlier, if tariffs build slowly, there's still plenty of room for inflation to move down in the first half of the year. The Fed may want to take advantage of that and cut rates. That's actually how we see things playing out, that the Fed can cut in March. So it'll be keeping his options open. But yes, I think it will be a heavy dose of caution, a heavy dose of trying to be careful, and a heavy dose of we're balancing a lot of things, including policy uncertainty.
Michael Gapin, before you go, the absolute reality, and you nailed this in your report, retail sales strength continues. And you got a nominal 3% growth in retail, but you got an inflation adjusted growth, which is, you got to go to Johns Hopkins to do this. It's a ginormous move. Michael Gapin, does Morgan Stanley model out ginormous retail sales?
We do, and we think it's a reflection of some of the same trends that we have been talking about for quite some time. Meaning, yes, the labor market is cooled, but it's still generating a lot of income, and that's outpacing inflation. So it's keeping lower and middle income houses spending, and it's a worn record, but wealth effects are still strong. We've added $17 trillion in net wealth over the last year and $51 trillion since the onset of the pandemic. That keeps, in economist lingo, target consumption high. It keeps upper income households wanting to spend. All of that is showing up in retail sales and further momentum in the economy.
Michael Gapin, thank you so much. Greatly appreciate it. With Morgan Stanley this morning, Gapin driving the market higher. It was up 29. Futures now up to a new high for the day, 31. Why don't you bring in our next guest?
Sure.
Because I never watch Netflix. I'm the least qualified person.
You're not a Squid Game guy?
No. Lisa, do you watch Squid Game?
No, I do not. My kids do. It's pretty gruesome. I don't know.
Robert Schiffman's in it, I think.
Oh, I think maybe he's got a cameo. Robert Fishman joins us, senior research analyst at MoffettNathanson, our good friends over there, doing some great work on the media, entertainment, telecom business. Hey, Robert, I was just reading your research note from this morning. Like a lot of analysts and a lot of investors, this company continues to surprise on the upside in terms of its subscriber growth. What did they report this quarter?
Yeah, good morning. Thank you for having me. So remarkably, they reported about 19 million net subscriber additions last night, which if you take a step back and really try to understand how big of a number that was, at the beginning of the year, we were forecasting the company to add in last calendar year about 20 million net additions. And they ended up doing that almost in one quarter. And for the full year, essentially doubled our entire forecast of over 40 million for this year. So it's truly remarkable.
Why isn't there another Netflix? Don't they have a formula people can copy, Robert Fishman? I don't see it out there.
Well, the other media guys are definitely trying, but it's not an easy template.
Why? I don't understand. I mean, if Columbia Records has a hit with Bob Dylan, you go out and find the next Bob Dylan. Why can't they copy Netflix?
I mean, Netflix has a lot of advantages, and probably the biggest one is being first and the size and scale that they've gotten to, especially outside of the U.S., is nearly impossible to compete. Again, we still think some of the other traditional media guys still have a ways to go, but are at least on the right path. But it's clear that no one is catching up to Netflix at this point.
So given that backdrop, Robert, and to follow up on Tom's question, I kind of, as I look at the landscape, I say, all right, Netflix, obviously they are the leader. I'm going to give Disney a pass and say they're going to have they do have a very profitable business and will get even more so. So they're a player. But after Disney, I don't know how this thing shakes out. Do you expect to see for lack of a better word, subscale players like a Paramount, like a Warner Brothers Discovery, did they have to kind of consolidate, do you think?
Yeah, I mean, we definitely think it's inevitable that these other streaming platforms that you're talking about need to come together because the size and scale that they're at today, frankly, just can't really compete. And what it really comes down to, again, is the U.S. versus the international business. And I think what Netflix has proven so well is they have the ability, you were talking about Squid Games before, to bring this content in from around the world. And most of the traditional media guys are really just focused on U.S. content and exporting that outside to the international market. But the benefit that Netflix has is creating all of this content outside of the world. And a lot of it is really hitting well in the U.S. as well.
Robert, your report's just pristine. I don't want to get into the numbers because it's too cold outside. But I do want to look, Robert Fishman, at you're saying I'm enthusiastic, I lift my price target, but I'm neutral until I see the 10K filing. What's the 10K filing, and why are you waiting to read that?
That's a very interesting question. So as far as the 10K goes, what we like to do is the annual report basically from the company. It just gives us a time to take a step back, really reassess as far as, again, what just happened this past year, what we got right, which in all candor was not a whole lot with this company because they continue to blow it out of the park. And so what we try to do is really revisit our forecast and try to understand how much more upside is there to go and try to value the stock appropriately.
Robert, let's talk about sports here. For most of this company's existence, they've said we are not going to get into sports business, the live sports business. But quite frankly, I'm just waiting for the press release to come when they actually have an NFL package. Talk to us about sports and Netflix.
Yeah, well, I mean, as you're alluding to, they already have NFL games. So as far as NFL package, we agree that that is inevitable. The NFL does have some time with their current contract so that there's an out clause towards the end of the decade. But as far as the current strategy for Netflix and sports right now is big events. And they're clearly doing that very well. That they again started out as big as you could imagine with the Tyson Paul fight, and then went to the NFL Christmas games. They just got the rights to the Women's World Cup for starting in 2027 and 2031, and so they're clearly adding to their portfolio, but they're doing it in a very strategic way, where they're building out event-tized sports content.
Are they a friend or an enemy or a frenemy of the National Football League?
I think they're going to be a big friend to the NFL, and the NFL is going to look to continue to bring them in many different ways to reach their audience outside of the U.S. and grow the international audience, which is a really critical piece to the long-term growth of the NFL going forward.
I mean, I'm trying to get to the weighted average cost of capital on this dog. I can't get there right now. Looks like the program's down. We'll have to see on that. I don't know. Absolutely fascinating. Robert Fishman, thank you so much. Great summary as well. Be kind to Michael Nathanson. He's had a tough, it's a tough couple of days. Yankees, I don't know. They didn't get. No. The Dodgers are taking over.
Oh, the Dodgers are taking
over. He's depressed.
Yeah.
Nathanson's
the Dodgers are taking over.
And Craig Moffitt, working for Robert Fishman, of course. He's cautious on Apple. He's been right on that. Apple South, to say the least. All I know is futures why are futures going up?
Why not? Sweeney? Why not? The animal spirits are out there. Earnings are coming in pretty solid. The tariffs maybe weren't as bad as initially thought.
Do you realize for a thug like Brian Belsky, this is warm?
Yes.
Where he grew up, this is a heat wave? We'll have to see. Futures up 34 with our news in New York City. Michael Buck.
Thank you very much, Tom, Paul, Lisa. President Trump rescinded Joe Biden's executive order on AI, halting safety and transparency requirements for AI developers, and is expected to issue a new order. Trump announced a joint venture to fund billions of dollars worth of AI infrastructure with the goal of increasing to at least $500 billion in AI projects, including data centers and physical campuses.
To announce the largest AI infrastructure project by far in history, and it's all taking place right here in America.
Meanwhile, federal DEI employees are going to be gone by the close of business today on the way to being laid off. It follows Trump's executive order to rescind all DEI efforts within the federal government. DEI contracts are being canceled. Turkish President Recep Tayyip Erdogan has declared today a day of national mourning. Witnesses have described standing helplessly as people scream for help or jumping out of windows as flames tore through a 12-story hotel at a popular ski resort. The fire left at least 76 people dead and 51 injured. Rupert Murdoch's UK tabloids have settled his privacy invasion lawsuit and will pay him a substantial sum. Harry's lawyer, David Shearborn, read a statement in court today saying News Group offers a full and unequivocal apology to the Duke of Sussex for years of unlawful intrusion.
Prince Harry and his immediate family have also had to repeatedly withstand aggressive and vengeful coverage since starting his claim over 5 years ago. This has created serious concerns for the security of him and his family.
It was the first time News Group newspapers acknowledged wrongdoing at the Sun. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Paul, Lisa.
Okay, first of all, it's un-American. Stanford and California are in the AAC, the American Athletic Conference. How's this experiment going?
They're in the ACC, the Atlantic Coast Conference.
Excuse me.
Yes, they're with Duke.
They're with Duke. Duke's on top.
Yes.
That's
so
like normal.
crazy.
We expect that.
Yeah.
But it's turned upside down, right?
Totally upside down. So what I'm seeing is the teams that come, like Stanford came to play Duke and North Carolina. I think they brought like 3 or 4 teams with them. The basketball, men's and women's basketball, the field hockey, the diving, they all make one trip, it seems like, to play Duke, North Carolina, maybe NC State, as opposed to coming back like 10 times every year. So I don't know how they're figuring out this coast-to-coast thing.
Now, are we like into March Madness now that the Detroit Lions have been eliminated? Are we modeling? Is it too early to model?
We're losing coordinators. I'm sorry.
Yes, you're losing coordinators. That's it. You had your shot.
Do we have a Jets announcement today?
I'm still waiting for that because New Orleans is in play.
Yeah, we'll get.
Yeah,
not
so,
yet.
The Saints need coaches.
The goal was not to let the GM candidate and the head coach candidate leave the building yesterday, the Jets building. They both left, so we'll see what happens.
Okay, well, we'll have to see. But am I into March Madness study? No,
not
Duke's
yet.
on top.
We're in the depths of just conference play.
Is anyone at Duke a sophomore, or are they all freshmen?
Pretty much all freshmen, and barely that. Cooper Flagg hasn't even turned 18
yet. I love
yet.
busting your chops. This drives Sweeney nuts that they all leave after 15 games. I'm out.
They'll be gone by March.
Futures up 33. The VIX 14.81. From New York City on YouTube, this is Bloomberg Surveillance. Good morning.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
This Bloomberg Business Flash brought to you by Oracle. Attention growing businesses. Oracle is offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. For new U.S. customers with minimum financial commitment, offer ends March 31st. See if your company qualifies at oracle.com/Bloomberg. All right, we've got tech futures leading the charge this morning. President Trump's AI push backed by OpenAI, Oracle, SoftBank. That's offsetting tariff threats. Right now, SoftBank shares up more than 10% in Japan. Oracle up more than 10% as well. NASDAQ futures up 0.9%, 203 points. Dow futures up 0.3%, 144 points, and S&P futures up about 0.5%, 32 points. The 2-year yield at 4.27%, little changed, and the yield on the 10-year 4.57%, and that's down 1 basis point. To commodities, we have gold rising to its highest in 11 weeks. Investors kind of weighing Trump's tariff and tax policies. Spot gold up at $2,756 an ounce, and we have Brent crude $79 a barrel, WTI crude $75 a barrel. The Bloomberg Dollar Spot Index down about 0.1%. We have more earnings news. Abbott Laboratories down more than 1%. It's forecasting profit for 2025 that was in line with estimates. And we're hearing from the first major insurer to report earnings since the wildfires broke out in Southern California. We're talking about Travelers. Its CEO didn't offer any details on the financial costs, but its stock is up 5% after its earnings blew past estimates. Finally, another check of Netflix. Their shares up 14%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Lisa Mateo. That is a Bloomberg Business Flash. Paul and Tom.
Lisa, thanks so much. I just looked at the Los Angeles Times rain somewhat forecast.
But that brings
flooding
and mud. The mud issues. Yeah. So they can't catch a break there. So hopefully, I think it's still on balance. That's got to be a good thing. They'll bring some rain.
And Lucas Shaw said they're back in TV production. I mean, at least people are trying to
that part of the cities
get things done. This is an important discussion. It's not an annual discussion, but at the beginning of the year, it matters. Sweeney's nuts about this, and we'll have to see. Dan Paris joins us with Federated Hermes, where he runs money, of course, and a portfolio manager, a Fulbright Hayes Scholar many years ago, and also an author, including my acclaimed The Ownership Dividend. It's a lovely little dense book on dividends. Paul wants to lead this, Dan Paris, but just let me say, is a share buyback a dividend?
Not in my world. First of all, good morning, Paul and Tom. In my world, no. On Wall Street, yes. Simple kind of philosophical difference. A share buyback or a harvested capital gain which one is supposedly leads to the other, is a market outcome, whereas a dividend payment from a company, whether it's publicly traded, privately owned, real estate, farmland, whatever, is a business outcome. For a lot of investors in the stock market, and according to the University of Chicago, they're the same thing. But as a business owner operating in the stock market, they're totally categorically different. They may work roughly the same way when things are going well, but they are philosophically just completely different exercises.
Hey, Dan, in a world where I guess these equity markets, at least over the last couple of years, have been driven by a handful of stocks, super growth, Mag 7 tech stocks, if you will, where does the dividend investing strategy play a role?
Yeah, the answer is going to surprise you. We have actually found that our opportunity set has widened and improved really from about 2019. And that's when the market began to narrow dramatically in favor of, I think at that time they were called the FANGs, and the name, the acronym changes over time. But our ability to get access to the S&P 493, call it, has been improving significantly over the last 5 years. Now, COVID, of course, made things a little bit differently, kind of a shock to the system. But we were already seeing our opportunity set. This is in a market that yields right now about 1.2%. And our portfolios have a materially higher yield. So our opportunity set really is kind of dependent on what's available to us in a low-yielding market, trying to be a high-yielding vendor. But it's not as bad as it would appear. The portfolio does have the usual suspects. Our opportunity set is stable in that regard. The utilities, pharma, large integrated energy companies, consumer staples, and so forth. But since 2019, the occasional industrial, the occasional technology company, the occasional consumer discretionary company, the occasional materials company do show up, and it was more uncomfortable a decade ago managing a dividend portfolio in what I refer to as a stock market. It is much more comfortable now. We do have more of an opportunity set.
So, Dan, when you talk to management teams out there, how does their view of dividend policy, how has it changed from, the last 15 years where we have basically zero interest rates to now we've got a more sprightly interest rate environment?
Yeah, the return of what I refer to as the cash nexus is only beginning to make its way into the boardroom. We did see some dividend announcements last year, and I think we'll see a few more tech companies announce dividends literally in the next few weeks as they announce their 2024 results. But really, it's a selection effect. That is, the companies that like to pay dividends were paying dividends 15 years ago and continue. And the companies that want to have nothing to do with it have had nothing to do with it for 15 years, except for a crop of tech companies last year, and I think a few more. The whole point of the book is that they're heading in that direction. But it's really the CEOs and the CFOs and the boards that are sympathetic to business ownership through the stock market with cash payment for minority share owners have been that way for 15 years, and those that have not, have not. And that really hasn't changed yet. That's what the book is calling for.
Dan, thank you so much. Got to keep it short with breaking news, but Dan Paris with us here with Federated Ramirez. I can't say enough. It's a dense, short read. I can't say enough about his recent effort here on dividends. I'll get that out on Twitter and LinkedIn today. 1977, I remember clear as a bell, there was a length of 40 days which was absolutely unprecedented. It's not 1977, but there's a tinge to it. Joining us now are Bloomberg meteorologist Rob Carolyn. To Paul's point earlier, Rob Carolyn, this cold dissipates now in the next 24 hours?
Over the next 24 to 48 hours, Tom, yes. It'll start to warm up in the southern United States, but it's cold. I was down in Slidell, Louisiana in 1989 working for the National Data Buoy Center and saw 5 above and half an inch of snow, and Slidell this morning is sitting at 11. And much of the Gulf Coast had between 6 and 12 inches of snow yesterday afternoon and last night.
What does that mean for the people down there? Does agriculture just roll up and die, or is it a non-event where they just move on?
No, it's going to definitely have an impact. They're headed into the strawberry season in Louisiana right now, and that's going to have to be absolutely decimated. I would imagine there are going to be some real big problems with any of that type of crop, considering it's 6 degrees this morning in Lake Charles, Louisiana. It's 11 right now in Gulfport, Mississippi. These temperatures are ridiculous. Destin, Florida had 5 inches of snow. Milton, Florida had 8 inches of snow. They broke the all-time snow record in the state of Florida by 4.5 inches. Just amazing how cold and snowy it is. And what will happen today is, even though the skies are clear, the snow, because it's so deep, it's not half an inch, it's going to reflect the sunlight. So that's going to keep their temperatures cold today. They'll only get into the low and mid 40s, and then likely fall back below freezing again tonight, well below freezing. So there'll be another hard freeze. They should be 50 by Friday, and actually southern Louisiana may reach 70 by Sunday, but the damage is going to be done to any type of agriculture in regards to like strawberries, that type of stuff there in southern Louisiana and across eastern Texas and southern Alabama.
All right, Rob, you're the expert. What's going on out there? Is this some unique phenomena, or is this something bigger, or is this just freakish? What's going on out there?
So it happens once in a while. The last time we had a really good setup like this, Paul, was 1989. We had it in December of 1989. Big ridge on the West Coast, dry weather. Southern California a couple of weeks ago, they still haven't had any rain. So the ridge is on the West Coast, and we're getting what we call cross-polar flow. So Arctic air up in Siberia came out, crossed Alaska, right down the continental divide, all the way to the Gulf of Mexico, and that has the eastern two-thirds of the country well below normal, all the way into Florida. It's going to break down, but there'll be another shot of Arctic air before the month is over. The pattern is just set up. This is kind of a very stable situation where we get the ridge in the west and a trough in the east.
Right.
When we did our long-range forecast back on October, there were a lot of signals that January was going to be below normal east of the Rockies, and that has panned out.
Right.
The pattern looks like it tries to change a bit with the cold shifting more to the central United States and a warm-up into the eastern U.S. the first week in February.
Right. Rob Carolyn, too short a visit. Thank you so much, as always, from the team here at Bloomberg Surveillance. We go to Surveillance Daiquiri correspondent right now, Lisa Mateo. I mean, Lisa, if you can't get the strawberry daiquiri, I mean, Chris Hanna, Jewel of the South Bar in New Orleans, he's got 1.5 strawberries mulled and halved. If you can't get a strawberry daiquiri, where does Lisa Mateo turn?
Where am I going to get the strawberries for my oatmeal? That's more importantly, Tom. Come on, you got to do it. You got to do it.
Strawberry daiquiri is a popular thing down in Aruba.
Oh, yeah.
What it's worth, yeah.
Ooh, nice on the
It was
beach,
frosty.
okay.
Oh, yeah. Yeah, that worked out well.
With a little rum. You know.
Yep.
Okay.
Yep. Sitting right on the
Sweets.
equator, it's always hot.
Thank you for that report
Yes.
from our healthy breakfast correspondent, Lisa Mateo. What you need to know, futures advance, futures up 34. The VIX 14.75. We're on YouTube. Subscribe to Bloomberg Podcasts, Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We've got futures on the rise, and that's signaling that the strong Wall Street rally of the past two sessions, well, it remains pretty much on track. NASDAQ futures up 0.9%, 215 points. Dow futures up 0.3%, 148 points. S&P futures up 0.5% or 33 points. We have the two-year yield at 4.27%, little change, and the yield on the 10-year 4.56%. That's down 1 basis point. The Bloomberg Dollar Spot Index is little change. We also had more economic data this morning. U.S. mortgage rates dropped for the first time in 6 weeks. MBA says the contract rate in a 30-year mortgage fell to 7.02% last week. Well, later this morning, we get a read on leading economic indicators from the Conference Board, and that's followed by initial jobless claims. That takes place tomorrow. Few companies making news. We'll start with Google. It's investing a further $1 billion in AI developer Anthropic. And then Indonesia says it's close to a deal with Apple over an investment plan that would lift that ban on iPhone 16 sales in the country. And finally, I thought this was interesting, and Tom would appreciate this. Jeff Beck's music legacy played out, historic auction, personal guitar collection, about 130 guitars, amps, tools, auctioned off at Christie's, London. That is your Bloomberg Business
Hugely
Flash.
emotional. I can't describe how he fits into the pantheon. The Metropolitan Museum of Art had a spectacular guitar show, rock and roll show. They had Motown's original stuff, and they're stuck in a corner, and everybody ignored it. It was the most important Telecaster in modern history, which is Jeff Beck's, and it'll be hugely anticipated. All the heavyweights will show up. There'll be major money moved for that over the late Jeff Beck. This is a joy. I remember him as a bank analyst at SunTrust. Sweeney he does equities and fixed income and that, but he's hardwired into the real estate market through MBS and all the derivatives, and that joins us from Angel Oak Capital Advisors. Thank you so much for being here. I know you wanted to come up here because it was too warm in Atlanta. Sweeney, just cut to the chase. Is the worst over for commercial real estate?
I don't think so. I think that there's more stability. And one of the things that has happened, even though the Fed embarked on rising rates, is the functioning of the capital markets has been amazing. And generally what you see is that the functioning slows down, which creates all these ripple effects. So what I would say, and we have huge investments in community banks, and what I hear from the bankers is that the worst is not over, but they feel more comfortable with the process of what will eventually happen, which is there will be some impairments, and impairments will go through the system.
So in the fixed income business here, broadly defined for 2025, where do you see the best value? Is it in some of those agency securities? Where do you see the best value?
I think across the board in fixed income, even though as you had mentioned, high yield and CLOs, when you look at it from a pure historic perspective, they seem to be extremely tight. But when you look at it relative to where we are in an economic environment, they could stay tight for a longer period of time. What we see relative value is in agency mortgage-backed securities and non-agency mortgage-backed securities. And that's where you get most for relative value relative to all fixed income instruments. And it's a very simple concept. One is the volatility of rates that we saw in the second half of last year causes spreads to widen out. And two, banks are still out of the market as they're dealing with their mark-to-market losses on their balance sheet.
So talk to us about the private credit business. How does that impact guys like you that invest in fixed income business?
So everybody globally, private credit is the term, but when people talk about private credit, they generally talk about corporate credit. Okay. And majority of the flows are in corporate credit. You see that through bank loans, which is a term which is basically corporate private credit. What we focus on is private mortgage credit. Private mortgage credit, which basically was the one that caused the financial crisis of 2008.
It's your fault.
and basically went non-existent. In fact, if you think about it, we nationalized the mortgage market after the financial crisis. Nobody was doing any non-agency mortgages. And the market is relatively new and sits at 2% of the overall mortgage market and should probably be about 10% of the overall mortgage market. So you're seeing a tremendous growth in that, and that's where we play a role in providing that to institutional investors.
Do we have better transparency now than the CDO squared idiocy of 2006?
So to give you a perspective, we originate loans and we own them on behalf of our institutional investors. Each loan has to be audited. Each loan that has to be audited before it goes into a securitization. And we keep the risk retention of those loans for institutional investors. So the data, the analytics, the underwriting standards are just in a different place right now.
So from your fund, you provide residential mortgages?
Yeah, so
I can get a mortgage from you?
We can get.
Can you refinance my 6% mortgage?
You may not
the show just became interesting.
Yes.
So we have a sister mortgage company where we originate mortgages across the country, but this is not an originate to sell model. We own the risk and the credit on behalf of our institutional investors.
Interesting.
You may not like the rate that we provide you.
Is it typically higher than a?
It's 100 to 150 basis points over government mortgages.
What is President Trump going to do to your world? How does it change? I mean, is there like a brief that we need to know on that?
Yeah, I mean, so if you think about, as I mentioned, Fannie Freddie got nationalized after, so a part of what's happening is, if you talk about privatization of Fannie Freddie, it's already happening because Fannie Freddie, when they originate the loans, they sell the credit risk transfer bonds to investors like us. So they're selling the risk anyway. And so if they want to purely make it private, as in take it public again, they have to think through how it means for the rest of the market. For us, I think we think it's a positive, because there are a lot of mortgages that were done that do not qualify for home affordability, which is what Fannie Freddie was created. And so we think more of the market will come to private hands at that point.
Interesting. One final question. The Cook Political Report did an essay on swing states and adjacent swing states. And sticking out like a sore thumb to them is Georgia. Do you see a Georgia boom economy?
Georgia is, I mean, it's tremendous what's happening. And used to be Georgia was Atlanta surrounded by Georgia, as we say. Mm-hmm. But we're seeing tremendous growth in Athens. We're seeing tremendous growth in Savannah. Yeah. And I think that just continues.
Do you see on a real estate basis people moving from Florida north to Georgia where it's warmer?
I think that we're seeing a lot of movement of young people to Atlanta. Tremendous resurgence of young people based on businesses moving in, and it's driven by airport.
Yep.
I think what's different between other states is state taxes. Georgia has a state tax, and there will have to be something done about that. So
don't be a stranger. Sweeney Prabhu, come back when it's warmer.
Thank you so much.
Greatly appreciate it. Angelo Capital Advisors. Right to it with Futures Up 34. Our news in New York City. Here's Michael Barr.
Thank you very much, Tom, Paul, Lisa. Just minutes before the trial between Britain's Prince Harry and Rupert Murdoch's UK tabloid started, the company offered an apology for intruding into his life over decades, agreeing to pay substantial damages. The statement offered by News Group newspapers also admitted intruding on the life of Harry's mother, the late Princess Diana. News Group admitted phone hacking, surveillance, and misuse of private information by journalists and private investigators against Harry. Prince Harry's lawyer, David Shearborn.
News Group newspapers unlawfully engaged more than 100 private investigators over at least 16 years on more than 35,000 occasions.
Prince Harry and another man were the only remaining claimants out of over 1,300 people who had settled lawsuits against News Group. At a White House event last night where he took questions from reporters, President Trump was grilled about his decision to pardon January 6th rioters.
He was given many years in jail. I thought it was very excessive. And at least the cases that we looked at, these were people that actually love our country, so we thought a pardon would be appropriate.
Meanwhile, as President Trump cracks down on immigrants in the U.S. illegally, some families are wondering if it is safe to send their children to school. The Trump administration announced it would allow federal immigration agencies to make arrests at schools, churches, and hospitals. A major winter storm that slammed Texas and the northern Gulf Coast is spreading heavy snow, sleet, and freezing rain across parts of the Florida Panhandle and eastern Carolinas. New Orleans digging out from 10 inches of snow. Shari Broussard is Public Affairs Director for Mobile County, Alabama.
I've heard some say, treat what we're expecting over the next couple of days like you would a hurricane. So if you wouldn't be out driving in a hurricane, then perhaps you shouldn't be out driving in ice and snow and sleet.
Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr. This is Bloomberg. Tom, Paul, Lisa.
Michael Barr, thanks so much. Paul Sweeney on Netflix with Robert Fishman there. So if you're a movie or any property, I mean, Netflix has to be your first ask, right?
Yeah, absolutely.
That's the heart of the matter.
I think you're right, Tom, because they just have the most subscribers, and that's kind of what you're looking for at the end of the day. So historically, they've had the biggest checkbook in Hollywood for the last 10 years.
And even more so now.
Yeah, because as Robert Fishman told us, Tom, their international business is so big that it dwarfs everybody else. Forget about it. So. Again, everybody else is playing catch-up. Disney's there. They're going to be fine.
And you told me to buy it when it was in the tank
exactly.
in 22. Of course, I ignored you. Thank you.
Step
there
up.
it is on Netflix. Thank you so much. Futures up 34. From New York City on YouTube, Bloomberg Surveillance.
You're listening to Bloomberg Surveillance with Tom Keene and Paul Sweeney on Bloomberg Radio.
Good morning, everyone. Paul Sweeney and Tom Keene from the Christie's auction in London right now. Joining us now, electric guitar aficionado Joe Weisenthal. Jeff Beck, they're right in the middle of the auction now at Christie's. Yeah. The 54 Les Paul had a peak bid, an estimate of 500,000 pounds, and went for over 1 million pounds. Are you bidding today on the Jeff Beck estate?
I'm not going to outbid you on that. I think you've topped me on that. The max I was going to go was 900,000 pounds. When you hit the bid at $1 million, I said, let Tom have it.
They're bidding right now on a Fender here from Fullerton, California. We'll continue to monitor the Jeff Beck auction as well. Right now, we monitor the excellence of odd lots. You've been on a tear on big themes. What are you doing right now after the future of the euro?
Whoa, what is the future of the euro? That is a really good
Well,
question. Is that what we're talking about today?
No, what are you doing forward?
I want to talk about the future of the euro, actually. Can we talk a little bit about that?
Okay.
Well, you know what's really striking to me? This is a big theme that we discuss a lot on the show. And when you said the euro, it reminded me, so much of this decade is totally the opposite of the last decade. And it's so striking in so many respects, right? So last decade, we were concerned about weak employment. Now we're concerned about, inflation and so forth. It's really striking how much stronger the peripheral economies are in Europe right now versus core. Remember, like in the 2010s, it was always like the strong core, Germany strong, Northern Europe strong, weak periphery. The peripheral economy, it's complete. It's really striking.
Italy and Spain.
They're like two of the
Portugal.
they're some of the fastest growing. Greece is doing fine. Right. And then meanwhile, every day it's another story about some trouble in German heavy industry.
Germany, I mean, if you're in, exactly, I mean, the more I learn about Germany, it's just, it's not, I wouldn't say dependence, but certainly it's tightness with China in terms of being a customer for all the big machinery that comes out of German industry.
Well, there's two things, right? Because one, it was they had China as this huge customer for industrial output, and much of it was powered by cheap gas from Russia. And both of those things are deteriorating in one way or the other. China able to build more of its own industrial machinery.
Yeah, Paul, get one more question in here, because I'm watching the auctioning of the Marshall cabinet in the beat-up Anvil Road case at the Jeff Beck auction.
Oh, I think you got to be there. So, Odd Lots, what's coming up next?
We have a episode coming out tomorrow with the CEO of a New York City-based startup called Ramp, which helps companies track their expenses. But what's really cool is because they can do that, what employees are spending money on, they can see what people are spending money on AI specifically, and so they could see, okay, 2 years ago people were spending money on ChatGPT. Now they're spending money on ChatGPT and Claude and others. So very interesting. You know, you hear a lot of hype about AI.
Right.
So conversation about what's actually being spent, what divisions of the company are spending, and so
Joe
forth.
Weisenthal audible right now. The president's funding AI in some way.
Yeah.
Data centers. I don't buy it. I don't buy the free lunch of data centers. Discuss.
I can't. You know, the thing is, so there's a lot of money going into this, and here's something I'm obsessed with the last couple of days. DeepSeek. Have you heard of this?
No.
Chinese ChatGPT competitor. Apparently they built, it's amazing. I've been playing around with it. It's just as good for all the basic things I want to look up. Apparently it was built for a fraction of the cost. And so, you know, built under...
Has your marriage survived with your AI study at home?
I had bad insomnia last night, and so I was up all night talking to AI.
Okay.
Exactly right.
We got to go. We got a very important idea. Joe Weisenthal,
Thank you.
Odd Lots, thank you. Garth Hudson changed music. He was with a small band called The Band, and in the vicinity of 19 whatever, he did Chest Fever. Garth Hudson is dead at 87.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
I'm sorry, it's a boom economy, and that's what we're adjusting to.
Neither party seems to want to take on deficits at all.
With Lisa Mateo on markets.
Stocks are coming off of another record high.
And Michael Barr with news.
Tensions between the U.S. and China have heated up even more.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Tom Keene, Paul Sweeney, Michael Barr, Lisa Mateo. In this hour, we really focus on equities. Ira Jersey will show up with a Premier League report.
Great.
We got to do it to balance out. We got to balance out. Brian Belsky later in the hour, teeing up Gino Martin Adams right now, and we do this with futures. I mean, Paul, it's not a melt up, but I don't see the bid slipping away. I'm searching. I don't see it.
No, I don't see it. And, we've got some good earnings coming out. We had the banks last week, Tom, which really put up some really solid numbers here. We had a good print from Netflix last night suggesting that the consumer is doing well here. So that seems to be a little bit of the narrative. And that has to be the narrative. A lot of folks say in 2025, if equities are to perform, it's got to be earnings driven.
We'll have to see. We're monitoring a Jeff Beck auction at Christie's. That's what we do here at Bloomberg Surveillance. Guitars going for $500,000, a 54 Les Paul.
He's got a lot
for
of them.
$1 million. But Paul, it's accessible for you and me.
Yeah.
A Marshall cabinet in an anvil case just went for 5,000 pounds.
Yep. Yeah,
we could slip into that.
I mean, what I noticed on this auction thing is he owns a lot of guitars, a lot of amps. So
yes, we all do. There's
exactly.
There's my size, and there's Jeff Beck's size. Mrs. Keene is listening to this. Go, when does the auction? When do we do the? Oh, you're laughing over there, are you?
She already texted me.
Yeah. Oh, she already texted
Keep them away.
It won't be a Christie's. It'll be some, like, there it is. It just went. It's a rolling kind of a thing. Absolutely fascinating. A piece of music history there is. Thank you for teeing up Ken Feliu. Garth Hudson there with the band. Right now, we're going to look at futures up 33, up 35 moments ago. Let's do from the Interactive Broker Studios, the Bloomberg Business Flash. Lisa Mateo.
Yeah, futures getting a nice lift thanks to strong earnings. We'll start with companies like Netflix. Their shares up 14%, record 18.9 million quarterly subscriber gain. And that was thanks to its first major live sports events, also Squid Game, yes. And shares of United Airlines, they're taking off. They're up more than 4% thanks to strong demand for business class, international travel. Procter & Gamble up more than 3%. Organic sales surpassed estimates on higher volume. Where we're seeing a drop in shares, Johnson & Johnson reported better than expected quarterly revenue and profit, but shares down 2% because sales for its medtech unit, that missed estimates. So we have NASDAQ futures up 1%, 216 points. Dow futures up 0.3%, 164 points. And S&P futures up 0.5%, 33 points. The 2-year yield, 4.26%, down 1 basis point. The yield on the 10-year, 4.56%, down 1 basis point. And we have the Bloomberg Dollar Spot Index as little change. And Bitcoin, have to point out, it's down about 2.5%, but above 103,000. That is your Bloomberg Business Flash. Paul and Tom.
Lisa, thanks so much. We're going to really look at equities this hour. That seems to be where everybody's head is right now. We look at currencies as the litmus paper of the system, but we're into earnings season. And always brilliant on this is the calculation of Bloomberg intelligence over what earnings will do. Gina Martin-Adams joins now for a brief. Gina, what is the latest from your team of 500 people? Are we still double-digit earnings growth?
It looks like we will be close to double-digit earnings growth in the first quarter. I think that the analyst consensus is still a bit low. The analyst consensus is right around 7% earnings growth. The financials have come out and just crushed expectations across the board so far. So we've at least started off on good footing. If there is any risk really to watch in the earnings season, it's that some of the high flyers of 2024 falter a bit in 2025 under very high expectations and pretty tough comparisons, especially here in the first half. So that will really come next week when we start to get more tech earnings coming out. But so far, so good on earnings season. And it does look like we're on pace for close to double-digit growth again.
After Netflix, does that amend your study of quote-unquote tech earnings?
Not necessarily. And, offsetting Netflix is the news from Apple, right? So I think that you've got a lot of different stories and quite a bit of dispersion that's starting to open up in the broader tech telecom media space. Netflix is actually in the communications sector. It's more consumer focused. It's obviously a services entity. That's very different than some of the hardware focused names. Some of the semiconductors are arguably at the greatest risk in the index, given very, very high expectations and high valuations. So I'd say when it comes to tech broadly, software and services generally more defensive, generally better positioned than some of the tech hardware, more equipment-y type of names. Equipment-y, I just made up a word there. Equipment-like names in that space. And so you've got a little bit of dispersion that opens up, just a little bit of opportunity for both upside and downside. The risks are just a bit higher in 2025.
Gina, it looks like today's futures performance positive, yesterday's green on the screen, maybe a little bit in response to the tariff news that maybe the tariffs weren't as immediate or as erroneous as maybe originally thought? Is there any credence to that? How do you think about tariffs and maybe how the stock market
Yeah,
thinks about it?
I think it's a bit of gamesmanship. It's a lot of short-term trading around tariff headlines. It's very difficult to get a strong read through just yet. We're on again, off again with tariffs on various countries. So you're playing a lot of ping pong in the equity market right now, trying to trade the tariff headlines. I think more likely the market is pretty excited about the strong earnings that we've been getting so far. Pretty positive on the idea that economic indicators are coming in a little bit better than expected. Generally okay with the inflation numbers of last week, which at least set us a base to climb out of what was looking to be a pretty difficult corrective phase in the S&P 500. But broadly, we're a little wobbly on the index, right? We've made our peak in the middle of January. We've been kind of wobbling around those levels. Were in December, we had a pretty wobbly market. So I do think that the story for 2025 is going to be more volatility. You probably have to read through a lot of headline risk, try to figure out what the long-term earnings outlook looks like. It's still pretty supportive, but maybe losing momentum in some sectors, gaining momentum in others. So there's a lot of opportunities that emerge this year. What it ultimately looks like is probably a choppy market, but nonetheless, there are still opportunities.
What's the Gina Martin Adams, there is no alternative meter? What does that say today?
Yeah, it's very interesting because there are alternatives to stocks. Those opened up when the Fed was in its tightening phase. We had a little bit of period of Fed ease that helped to elevate equity premiums once again, but now it looks like that Fed easing process is probably over or at least halted in the short term. That means we have to think about alternatives. Now, this is really interesting because when we look across the landscape of global equities, you see markets in the global equity market paying as much as 5-7% dividend yields, while the U.S. pays less than 2%.
Yep.
So I think to the degree that you're looking for a yield, you're looking for yield alternatives, it's tough to find those in the U.S. large cap space right now. But you can find them in global stocks, and you can find them inside sectors in the U.S. You just can't find it in the U.S. at large. So when we're thinking about the relative opportunity from a yield perspective, if we are in a period of a point in time where inflation has stabilized and may even eke a little bit higher over the course of 2025, yields may come back into the story, into the limelight. That may give investors the opportunity to take advantage of areas of the world where we pay a higher dividend yield. It just doesn't, it's not the U.S.
Yeah.
So we've got to look elsewhere.
Get one more in here.
So, Gina, what for you and your team, what screens well these days, whether it's an industry or a factor?
Yeah. So in terms of the factor landscape, we practice a multidisciplined approach. One of the things that we look at in quant is a broad array of factors. From a factor timing perspective, it's pretty controversial, but nonetheless, if you do want to time factors, low volatility actually screens very, very well. Right now, it had a pretty good year in 2024, despite the fact that markets rose. Low vol still performed quite well. As VIX is lower, you want to consider moving into kind of lower volatility equities. When VIX spikes, it's not necessarily the greatest time to invest in vol. But nonetheless, we do see volatility emerging as a theme in 2025. That means low vol stocks should be somewhat supported. When we think about sectors, it's really a story for us of rotation into the more financially oriented early stage cyclicals that kind of got left behind in the rally in 2024 and starting to shave, and maybe even lighten up positions a little bit in the tech communication space where we've had such strong leadership for so long.
Gina, thanks so much. Gina Martin Adams, Equities for Bloomberg Intelligence. Chris out on YouTube, thanks for noting 1% from all-time highs on the SPX. Monitoring the Jeff Beck estate at Christie's in London, the Ibanez just went for like 15,000 pounds.
Oh, okay.
It's not George Benson's Ibanez, it's Jeff Beck's. So, I don't know.
Here's something that's pretty cool. The touring flight case, Jeff Beck Group, London, Fragile. Estimate 800 to 1,200 pounds, went for about 24,000 pounds.
Exactly.
Wow.
Ira Jersey bid on that and got priced out. Joining us now, we switched to fixed income before Brian Belsky on equities. Ira Jersey joins us now, again from Bloomberg Intelligence. Ira, what have you published since the inauguration?
Well, we've been focused on the Fed meeting because, as we get more and more of the Trump plans, we're waiting for things to come out of the Treasury Department. So, obviously we have a lot of debt that needs to be issued, a lot of debt that needs to be refinanced, and how all that's going to happen under the new administration, we don't know yet, but we'll find out the week after next. But we have to take these things one thing at a time for the markets, and the Fed meeting next week is our priority, and then after that we'll focus on the issuance patterns and other things coming out of the administration.
So, Ira, we got the 10-year Treasury at 4.57%. Am I going to see 4.25% or 4% before I see 5%? Where's this thing going?
Yeah, that's an interesting question because I think that there was optimism initially where people thought that Trump's policies might be pretty supportive of the economy and certainly inflationary, things like tariffs, as well as some of the immigration reforms that he's talking about doing, and could all lead to higher inflation. But I think that's mostly priced in now. We've been on this kind of journey that we're going to be in a wide range over the course of this year, and we may have seen the yield highs for the year. So to your question, will we see 4% before 5%? We think that that's probably the case. The question is, how do we get there and when? So it'll be difficult to get there if the Federal Reserve is in fact on hold for most of the rest of the year, thanks to the resilient economy and inflation not declining significantly further. So it's very possible that we'll see even a tighter range than that, right? 4.25 to 4.75, maybe broadly speaking, on the 10-year would not surprise us. It's that front end of the curve, the 2-year, and what it does that I think will wind up being a bit more interesting over the course of the next 3 to 6 months as we adjust to the new administration and the next Fed regime.
So how is this Fed going to behave here? It sounds like maybe from the last meeting, Ira, they said, we're just going to kind of sit on the sidelines a little bit and really be data dependent. Is there any reason to kind of change that tone at all?
I agree on this. This to me is really important.
Yeah, I don't think that they'll change that tone right now. I think that the Federal Reserve is going to sit on its hands next week. The important bits are going to come, and we did put this out this morning to Tom's earlier question. We're looking at when should people expect there to be market volatility next Wednesday? At what time? And next week we only get the statement. We don't get any summary of economic projections or a new dot plot or anything like that. So it's really the press conference that the market's going to focus on, and that will generate the volatility. And that's also where the new information will come. And I suspect that Jay Powell and the rest of them are just going to say, like, look, we don't know what we're going to do, and the market's going to keep on wondering, look, are they going to cut again or are they not?
Yeah, but the heart of the matter is everyone's been wrong, including me, on the growth of the American economy. It looks like another quarter of something on the edge of solid. And Ira, the job economy hasn't broken yet. Is that correct?
Yeah, I think that's exactly right, Tom. And the fact that you still have reasonably good labor growth. Now, it's not nearly as strong as it was a year ago or a year and a half ago, but you still have decent wage growth. You still have jobs growing and faster than the replacement rate, so faster than people are retiring, right, and faster than new people are coming into the workforce. So that's one reason why you haven't seen the unemployment rate spike significantly higher, even though it's off the lows. So at the same time, you look at retail sales and spending and inflation, and all of these data suggest that we're kind of in a slower but still okay growth regime. And because of that, there's significant questions as to why does the Fed have to lower interest rates at this point? We're asked all the time, where is R-star? Where is this real neutral rate of interest? And what should, and that drives where Fed policy should be. And the answer to that is, I think, probably between 3.5% and 4%. So we're effectively there, right? We're right at the neutral rate or within 25 basis points of it. I think the Fed thought for a long time that it was much lower, that it was more like 3%, and that the economy was going to slow enough that they would be able to cut down there. But clearly, based on the incoming data that we have now and a lot of the shifts in forecasts, That's not the case. So the Fed is probably more likely, nearing completion of this short easing cycle, and then the next move may very well be interest rate hikes. Maybe not this year. I think that market pricing for some chance of a hike later this year is a little bit too soon. But in 2026, hikes are not impossible at all.
Hey, so Ira, who buys our debt? What non-U.S. entities buy U.S. treasuries at these auctions?
Yeah, well, I'll say a couple of things. Firstly, most U.S. debt is being bought by domestic investment funds, right? It's being bought here domestically, so it's U.S. savings getting put into treasuries as opposed to other potential savings vehicles. But on the foreign side, the people who buy it are actually private foreigners. So central banks and what we call official institutions in some of the data have actually been net sellers over the past decade of U.S. debt, but it's private investors. So it's pension funds, it's insurance companies that have U.S. dollar liabilities, right? It's one of the advantages of us having reserve currency is a lot of things need to be insured and liabilities that need to be hedged in U.S. dollars.
Ira Jersey, thank you so much for the brief. Greatly appreciate it. Mr. Jersey with Bloomberg Intelligence on fixed income. Martin Adams and Jersey back to back. That's the way we roll. George Saravelis at Deutsche Bank with a stunning essay on O Canada and weak loonie. He is modeling out a loonie from a 140 to a 1.53 weak Canada. Could touch the 2002, 23 years ago, all-time highs of 1.61.
Oh boy.
That is a wow essay.
And that is a response to the Trump administration?
That is a response that will elicit, yes, that will elicit a strong dollar.
Yep.
And you wonder when 1600 Pennsylvania Avenue will start screaming about strong dollar realities. We'll get George Saravelis in to expand on that. Saravelis with a weak loony call off tariffs. Futures up 32. With our news in New York City, Michael Barr.
Thank you very much, Tom, Paul, Lisa. Federal DEI employees are going to be gone by the close of business today, on the way to being laid off. It follows President Donald Trump's executive order to rescind all DEI efforts within the federal government. DEI contracts are being canceled. Meanwhile, with 22 states and 2 cities having filed a lawsuit to prevent President Trump's executive order ending automatic birthright citizenship, the issue could very well end up before the Supreme Court. New York Law School immigration professor Lenny Benson believes it is part of the 14th Amendment that would require the full amendment process to change, and the Supreme Court is, at some point, bound to see it that way.
To allow a president's order to overcome or change the interpretation without the traditional historical analysis or textual analysis is very unlikely, even in this conservative court.
Professor Benson, as the ACLU and Washington, D.C. have also joined in filing lawsuits. A major winter storm that slammed Texas and the northern Gulf Coast is spreading heavy snow, sleet, and freezing rain across parts of the Florida Panhandle and eastern Carolinas. Warning areas, including big cities like Jacksonville, which could see snow, sleet, and accumulating ice through today. Blowing and drifting snow is expected in eastern northern Carolina, with near blizzard conditions in the state's Outer Banks, where up to 8 inches of snow was predicted to fall. Meanwhile, New Orleans set a record for snowfall on Tuesday, nearly 10 inches. This Australian tourist was in the French Quarter, buried in snow.
The tour guide swore that it wasn't going to snow, and if it snowed, there's no way it was going to stick. As soon as it hit the ground, it was going to melt, and so I guess he was wrong.
And, of course, blast of Arctic air has also plunged much of the Midwest and the eastern U.S. into a deep freeze. Global news, 24 hours a day, whenever you want it, with Bloomberg News Now. I'm Michael Barr. This is Bloomberg. Tom, Paul, Lisa.
Michael Barr, thanks so much. The YouTube live chat, timely. RP, thank you. Why is the VIX spiking a little bit right now? He's taken away my job. 15.26,
I don't know.
Futures up 30, but the VIX, it's sort of like dancing around.
Anything down
dollar stronger.
15, I'm fine. 12, it's quiescent, as you would say. 20 gets your attention. We're sitting here 50.
With this, I guess with the cold, it's like a 2-3 day thing. Oil really hasn't moved, has it?
No, it had a big move up in the last probably 4, 5, 6 trading days.
Came back a little bit.
Yep.
Yeah. We have George Saravelis Friday.
Oh, that's good.
Our
Timely.
team knows more about what they're writing and publishing than they do.
Oh, good. So book
They
them.
told
Book 'em.
Saravelis, Eric and our team told Saravelis to write about Canadian dollar.
The loony.
George Saravelis, Deutsche Bank, joining us on Friday. I am
Very good.
told as well. Yes, that is very good. Futures up 30 down. Futures up 131. The VIX above 15 right now, 15.26. We're on YouTube. Subscribe to Bloomberg Podcasts. From New York City, Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And this futures report sponsored by IBKR. Will the average U.S. temperature in January 2025 be greater than 34 degrees? I hope so. You can trade your prediction at Interactive Brokers. Buy yes if you agree, no if you don't. Correct answers earn $1. Go to ibkr.com/forecast. All right, we have tech futures leading the gains this morning. We'll start with Oracle up 10%. The company teams up with SoftBank, OpenAI to form a $100 billion joint venture. It's going to fund AI infrastructure. Then you have SoftBank, their shares up more than 10% in Japan. Also want to take a peek at NVIDIA shares. They're up more than 3%. It's once again the most valuable company, outranking Apple for the first time since late November. We'll start with NASDAQ futures up 0.8%, 192 points. Dow futures up 0.3%, 144 points, and S&P futures up about 0.5% or 30 points. We have the 2-year yield at 4.26%, down 1 basis point. The yield on the 10-year 4.57%, and that is little change. The Bloomberg Dollar Spot Index is little changed. To earnings we go. Abbott Laboratories, their shares down 2%. Forecasted adjusted earnings per share for the first quarter that trailed expectations. Then you have Travelers. They didn't provide any details on the financial cost of those wildfires, but did report earnings blew past expectation. Their shares up 5%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now. Wherever you get your podcasts, I'm Lisa Mateo. That is a Bloomberg Business Flash. Paul and Tom.
Lisa, thanks so much. Gina Martin-Adams with us here earlier. Brian Belsky here in a bit. Right now, Steph Guild with us here to get the market open with Robinhood. I don't get much exuberance here. It's just a lift. What do you see at Robinhood?
We see a lot of enthusiasm for investing in the market, but we continue to also see our customers trade around the volatility of the stocks. So, for example, Tesla was up a lot, in December, and that was a source of funding for adding to other places that maybe had not done so well.
How did you kind of, if at all, change kind of your investment outlook for 2025, given what happened with the election and kind of what we now know? Did anything really change for you guys?
Nothing's really changed. It's actually been so far working out the way
Right.
we had called for. I'm a little worried about rates going above, like I said, around the 4.5% mark with risk to 5%. It got to 4.8. It's kind of back down again. It could go higher than 5.
To cut to the chase, at your shop, remember the SPAC idiocy or the memes? Is it memey now? I don't feel like it is.
I don't think it's memey at all.
Why? Why is it not memey with the levels we're at?
Because our customers are investing in companies that have true earnings growth.
What's a typical Robinhood customer? Who is a typical Robinhood?
So we actually put all these stats out for Investor Day, so I have some good ones in my head now. We're about 50% millennials, 20% Gen X, and then the remaining 30% amongst Gen Z and younger. So
it's like boomer free.
Boomer free.
Well, Gen X, depends on how old you are in the
Talk to someone young like Paul.
60% male, 40% female. We have a mix of income levels, sort of on the younger side. About 60% of them are married. It's kind of like it's the next generation and beyond.
Or did they focus?
Does that mean 40% are divorced?
Yes, exactly.
20% said they were divorced.
Okay. So what are they more on the growth side? Are they overweight maybe some of these Mag 7s? What types of stocks do you find them typically investing in?
Yeah, at the top of so we have something called the Robinhood Investor Index. Okay. And at the top has been consistently Tesla.
Okay.
And I do think that there's just a cultural, true belief in Elon and what he does. I think beyond that, then you look at what I call sort of, at least for a while, the utility companies, like Apple's a utility company. And it's kind of been showing that to me from a return perspective recently. But then you've got Microsoft, NVIDIA, and then you've got some, belief in electric vehicles beyond Tesla. About 20% of the index has been invested in various electric vehicles. Our customers' average median age is 34, so they do have a longer time horizon to make their investments. And they are believing it. Ford has been at the top of that for a while. Disney, because Ford is trying to get into the EV game and grow their business. And then, at the bottom, you've got lots of stuff that come in and out.
I want to get to this after we open the markets.
Yeah.
But are you a bull now? Are you a convicted, in terms of your strategy?
My call since early December when I put together my outlook was 6,500 on the S&P. That's at the lower end of the Wall Street estimates.
Fair. Okay.
More bullish on mid caps. So far year to date, mid caps have actually been outperforming large caps, although maybe after today and after earnings that starts to change. I think you can't count out the large cap tech names. They just have so much clout in this administration and so much power that comes from money.
Let's come back and talk about the Mag 7 with Steph Guild here with Robinhood right now. We welcome all of you across the nation on your commute, of course, at your office and at your home on YouTube. You can subscribe to Bloomberg Podcast and join our live chat. Right now, with a lift to the market, Lisa Mateo.
Yeah, and much of that lift so far has been in the tech sector, so it'll be interesting to see what plays out this morning. We'll start with the S&P 500, up about 0.5%, 33 points at 6,082. The Dow up 0.3%, 160 points, 44,182. And let's get to the NASDAQ, up about 0.7%, 151 points at 19,906. We'll go to the two-year yield, 4.27%. That's little change. And the yield on the 10-year, 4.57%, and that is little changed as well. We have spot gold higher, $2,755 an ounce. We have Brent crude $79 a barrel, WTI crude $75 a barrel. The Bloomberg Dollar Spot Index is little changed, and Bitcoin down about 2% at just over 104,000. At the open, we're checking in with shares of Netflix. They are up about 12%. That is your Bloomberg Opening Bell Report. Paul and Tom.
Lisa, thanks so much. Watching Apple here down again, not as much as the drop yesterday, but nevertheless bottoming out here. Back to where it was first week in November, 221 on Apple right now. We're with Steph Guild of Robinhood. On the Mag 7, they just continue to, even if they've got a high multiple, they earn into their multiple, right? It's that simple.
Yeah, that's what it looks like. And as I said, before we kind of got to the open, I think they just have so much clout in this administration. They have a lot of cash on their balance sheets. They are dominating the AI innovation. It's hard to see when this could stop, other than just we haven't really gotten to the tough stuff when it comes to our deficit and interest rates. And that to me is the headwind. The other headwind is just energy, being able to have enough energy for all the infrastructure that needs to be built.
I mentioned that earlier.
Yep. On the mid-cap space, this is a name near and dear to Tom's heart, the Gap. Why is a Gap screen well for you guys?
It's certainly inexpensive. Relative to its history. It's been in the doldrums for a long time. It's at 10.8 times next 12 months earnings, but it's also cheaper than its peers. I just think the new CEO came in 2023. He's had some time to start turning things around. They are paying down debt. They brought in Zach Posen to kind of influence what product they're going to put out. It's just, and also technically it just crossed over its 150-day moving average over the last 1 year. So there's just some tailwinds, I think, behind it. It is still, I'd say, a little bit of a show me stock because the company is in the retail sector that is competitive. About 60% of its earnings come from Old Navy, so a lot of that will depend on what happens there, which is the lower price consumer space.
It's got a $9.3 billion market cap, and it's over the past 12 months up 30% there. So when you think about a name like the Gap, is that your call? Does that reflect your call on the consumer, or is it kind of specific for the story?
I think it's both. Like, I really think we're in I keep saying this all the time, in a stock picker's market.
Okay.
Like Peter Lynch famously said, the person who picks over the most rocks wins. And I do think we're in that environment because we have higher interest rates are going to stay stubborn.
Okay.
If you look at over the last 30 years, the Fed did a paper, 42% of earnings growth over that period from 1989 to 2019, what came from tax cuts and interest rate drops.
Mm-hmm.
And so I think we're in an environment where company management decisions and what they're doing with their company, how they're looking to grow it matters more than ever.
Thank you, Steph. It's been great. Steph Guild, thank you so much. With Robinhood this morning, really nice brief. This has been great. We put together this equity hour. Lots of different views. The granularity of Gina Martin Adams and Steph sort of non-boomer and edgy.
Mm-hmm.
Wish you put me in my place.
Put you in your place. No question there.
Thank God Belsky's going to save me.
Okay.
Brian Belsky coming up here with BMO Capital Markets. He's been just brilliant about being on board. A question for you this morning, folks, is all-time highs. We're nowhere near there yet, but we're monitoring. The S&P up 29 points. NASDAQ finally does a better percentage today, up 1.1% right now, but it's just very nascent. It's just the opening for the morning. A whole host of earnings out. It's more consumer today. Procter & Gamble. I think J&J's out as well. But, boy, we go into the tech earnings next week, as Gina Martin Adams mentioned, and I don't know what to make of it.
Netflix stock's up 12% here today, Tom. 52-week
really?
high all-time.
12%?
52-week high.
Think of the money that takes.
Sure.
To lift at 12%.
Yeah, this is a $400 billion market cap stock, so a lot of money being made today by those shareholders.
And Apple just crushed.
Yep.
I mean, there's no other way to put it. We'll have a lot more on that. Please stay with us from New York City on YouTube on your morning commute. This is Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
In the Bloomberg Interactive Broker Studio, I'm Lisa Matei. We've got tech stocks leading the charge. Wednesday trading right now. We have Oracle shares. Those are up this morning, more than 6%. The company teaming up with SoftBank, OpenAI to form this joint venture to fund AI infrastructure. We have SoftBank shares up more than 10% in Japan. And also taking a peek at NVIDIA shares. They're up about 3.5%. So we start with the NASDAQ up 1%, 197 points. The Dow up about 0.1%, 74 points. And the S&P 500 up 0.4%, or 29 points. Strength of corporate America continues. We talked about Netflix earnings. Their shares up 13%. United Airlines up nearly 3%. But Procter & Gamble, they're also climbing after strong results, up more than 3%. And Travelers up more than 3%. We get to the two-year yield, 4.27%, little change. And the yield on the 10-year, 4.58%. That is little change. That is your Bloomberg Business Flash. Paul and Tom.
Lisa, thanks so much. We wanted to talk to somebody today from the coldest place on the planet. One call. I mean, you get the Rolodex out, and you go, there's only one fool that would drive I-35 north from Minneapolis, 4.5 hours north to the Canadian border, the Rainy River in International Falls, Minnesota, 11 below zero today. Have you been there?
Yes, I have. And for effect, I'm wearing my St. Cloud State University gloves today. Shameless plug for Harvard on the Hill with my alma mater.
Very cool. They
Don't
sort
you
of
think?
look like they stole the logo from the Montreal Canadiens.
Well, they stole the logo from us. That's the way I like to say
Oh, the Canadians stole it from us. Well, we are doing an equity hour. Gina Martin Adams with us with the granularity of earnings. Great to talk to Robinhood and Steph Guild and now Brian Belsky for an extended conversation. You have killed this and you have to participate. How does someone who missed the Belsky boat, how do they participate this morning?
It's a wonderful question. We've been, very blessed and fortunate to own a stock like Netflix for 10 years for BMO clients for the wealth management side of things where we run money. Same thing with the Oracle. The reason why we've owned Oracle for so long is we looked at free cash flow and the balance sheet and the strength of management and product and service and all these things that I think from stock picking really defines what we learned way back, Tommy, from William O'Neill 30 plus years ago. But I think the best way as we kind of get into more and more of 2025 is to, quite frankly, barbell important sectors that are part of the Magnificent Seven. Namely, you can throw communication services in with tech, but then also throw in consumer discretionary folks. And I think the way that you do it is you barbell the big guys on one side, meaning market weight those big positions, and then be overweight relative to the index other smaller positions. If you want to call Oracle a small stock, which is not, right? So we've been pretty clear that the Qualcomms, the Oracles, the Palantirs of the world, we want to be overweight those areas, and we want to maintain the consumer staple-ish type tech that are part of the Magnificent Seven, both in tech, communication services, and discretionary. The discretionary barbell would be things like Amazon and Tesla on one side of the barbell, and on the other side of the barbell, be very overweight in terms of tracking your names like Lulu or Marriott or TJ Maxx or Ross Stores, those types of names, because that's where we see really the inherent growth and fundamental stock picking opportunities there.
Before we went on the air, I asked you a simple question, and I want to get your simple answer. I asked you, did you and your team change the way you look at the market based upon the election? And your response was?
No. Real clearly, those of you that know me for a while, I'm trying to be efficient in my conversation and also be very, very blunt at times. And we just don't like giving politicians, regardless of what side they are, any kind of credit. Politics have nothing to do with the absolute performance of the stock market. We proved it through our work. It's really about the trajectory. And going forward, I think the biggest thing that people are missing, because we are emotional. We're emotional, right? So we let our emotions and our personal feelings on both sides feel. But I think the biggest thing that people are missing with Trump 2.0 is the deregulation. I really believe that. If you think about our particular industry, which has really been in the penalty box, to use a hockey term, since 2008, 2009, we haven't been able to grow the way we have. You remember in the old days, as GE goes, so goes the market. Remember that? Yep. Then it was as financials go, so go the market. Now it's depending upon what day it is. Is it NVIDIA? Is it Apple? Is it whatever? We need to get back to financials really growing again.
You said something really important, folks. William O'Neill, folks, who we lost 18 months ago at 90 years old, changed business. It used to be Graham, Dodd and Cottle, railroad stocks, boring. And one day, Brian, you remember this, Investors Business Daily showed up with its granularity. Is the time forward now to do the granularity of Investors Business Daily a la William O'Neill, or is it just the blunt instrument, get in the market?
No, I think it's the granularity, and most people are going to say, "Well, Bill O'Neill's a technician, and it's momentum."
No, he wasn't.
He wasn't. So I know this firsthand because he'd say, "Belsky, what do you think about this stock?" And then he would start quoting me free cash flow yields and earnings growth on Cisco, and the man was unbelievable. I remember my first day there. He walks me over to the filing cabinet. For those of you that don't know what a filing cabinet is this thing where you put papers and stuff.
Lisa, take notes.
And he picks out this file and he goes, "You're from Minnesota, right?" He goes, "Let me know what you think of this stock, and I'll see you in 30 minutes," he said. And he threw me on this file, by the way. Right. It was Minnesota Mining and Manufacturing, exactly. 3M. So learn it. Okay,
Audible right now. 3M is showing a pulse of life.
It is,
after
finally.
An over decade cratered. When do you know to buy a burnt out blue chip like the Minnesota Mining and Manufacturing Company?
Great question, especially for that stock and industrials in particular, Tommy. It's about the operating performance. So it's return on equity especially, but assets and return on invested capital, which we're starting to see that turn. And that's when you want to be in that longer term, because when ROE and the operating performance of 3M and a lot of these international industrials have been going down for a while, and it's beginning to recover.
All right, let's get serious here. Let's
Yeah,
talk
let's
the
get
Vikings.
serious.
What are you doing
Oh,
at quarterback?
my
Do you stick with Sam Darnold? We have a lot of experience here with him in New York, or do you go to the kid?
Look at his eyes. Okay. Okay. And the Detroit defense, by the way, wasn't that big. He was not prepared. Okay. He missed. Everyone's giving the Detroit defense all this credit. He missed so many throws, man. He missed so many
But
throws.
he got you into the playoffs.
Hey, that's great and everything.
great.
God bless him. Thank you very much. I appreciate it. It's JJ's time. I think that I'm going to be controversial here. Shocker. What about Aaron Rodgers for a year? What about Daniel Jones for a year as a bridge to JJ? Aaron's done here, and Darnold, God bless him, go to the Raiders or go to somewhere else. He's not going to be a Viking. They're not going. There's a silliness they're going to make him the franchise player and then trade him. Why would you do that? So just no, it's time.
You've lived this like Michael Barr. Why is the frozen tundra of the North the best football right now? Why is the NFC Central just as good as it is?
I think that they were. I think that they were. The ownership has been, especially in Minnesota, has been consistent. God, I hope they buy the Twins, please. The Twins are for sale. But I think if you take a look at the head coaches, Campbell, the guy in Green Bay, I'm never going to give Green Bay any credit, but in Minnesota, they've got these young coaches that are able to find good people around them, and they're able to adapt in the second half. And I think that's why LaFleur, that's why Ben Johnson went to the Bears. I mean, if you take a look at the young people that they have coming up there, it's all about the infrastructure. So I would think the NFC North is going to be in a good position for a while, basically because of coaching and the infrastructure, just like picking a stock, Tom.
Who's the Vikings of tech right now?
I think it's probably more of a value play. So it's a great question. Probably more like Qualcomm, I would say. That'd be a better way of thinking about it. Qualcomm has been a great performer, but not everybody's jumping all over the place.
To me, it's just persistent free cash flow, and that I get they got a multiple, but they're growing into their multiple every 90 days.
Yep.
Do you see an end to this habit of modeling out free cash flow every 90 days up?
I don't. And oh, by the way, when you're modeling free cash flow, you got to think about dividend growth, right? Because we're buying stocks that have free cash flow yields above the dividend yield, and that's why both of our dividend growth strategies, one's a North American and one's a U.S., outperformed the dividend aristocrats last year, because we're not focusing on yield, folks. We're focusing on free cash flow yield above the dividend yield and growing the dividend over time.
30 seconds, we're going to come back with Brian Belsky. Can you acquire Apple here after the repricing of the last month?
Absolutely. I mean, Apple's one of 5 stocks you want to own longer term, and when the stock is down, it's like a gift from God.
There you go. So, I mean, given overweight tech, you got to be all in on AI, right?
Wait, Aaron Rodgers is a gift from God.
That's right.
Okay, continue.
Just real quick, I mean, you got to be all in on AI, right?
I'm all in on AI, but some of the best AI stocks are restaurant brands, Timmy Hortons in Canada, Costco here, Walmart.
We're going to get to that.
Yeah, so you have to be.
I think that
it's real.
We got an email from Jennifer Lee today.
Oh, here we go.
She's
one of my
with her
favorite
daughter
people.
in math lessons. She's freezing. It's like 4 below 0.
I know. It's hardy up there.
She's
Toronto.
flogging her daughter for math lessons here. Can you straighten her out and tell her math doesn't matter?
I'll see her next week.
Okay, we'll do that. We're going to come back with Brian Belsky right now. We're up 81 points right now, and the Dow is up 81 points, I should say. The VIX 15.06. From New York, it's Bloomberg Surveillance.
You're listening to Bloomberg Surveillance with Tom Keene and Paul Sweeney on Bloomberg Radio.
Good morning, everyone. It's an emotional time. I'm tearing up here. They've come to take me away. That's what it is.
We knew that day was
Joining
gonna
us
come.
in our studios on radio nationwide. Good morning, 92.9 FM Boston, 99.1 FM in Washington. It is an anniversary today, Paul. It's been 1 year of you and me and Michael Barr and Lisa Mateo.
Right.
Lisa Mateo. It's been 1 year. Joining us now, the guy driving this, Ray and Brian YouTuber here. Thank you so much for showing up. We're like dazzled by YouTube. You know, the junket you're on, you're traveling worldwide looking at the international growth of this project. Did you see this coming?
Of course.
Please, could you move closer here to the mic? This is the mic. It's radio, microphone, Ray. Stay with us.
Yeah. Congratulations on 1 year, Tom, Paul, Mike, and Lisa. You guys have grown incredibly in 1 year, and we have something very special to present to you.
Oh boy!
Bigger than Netflix earnings, bigger than the Bills win.
Okay,
Very
I can't take it overnight. Oh my word! Look at this.
If you're listening on radio, you got to tune into YouTube to see what we've got here. Maybe explain what we've got.
Yeah.
All right, why don't you come in?
Wow.
Look at this. I see this on all the sites, like Bobby approved in food, but I don't. You know, this should go on Ken Fellow's desk or Bob Bragg's desk. Shouldn't go on Rich Truman's desk.
This is an award for 100,000 subscribers on
There
YouTube.
you go.
Wow.
Which you surpassed a few months ago, I should say. You're up to 130,000 now, but in a year's time, that's incredible growth.
Great
and
stuff.
You know, if you're listening on radio, I suggest tune in on YouTube. You can live chat with Tom and Lisa. It's incredible.
I probably had the most fights with Colin of the Twins, so I think that should go on. Why don't you take that, and that should go on his desk. Lisa, you should get an emotional shot of this. I mean, this is too much.
Over 100,000 subscribers, Tom, to YouTube. That's pretty.
Yeah, what's amazing
solid.
about
See,
this, folks,
this YouTube's for real time.
and what I didn't expect is we had meetings on this, and you know, Ray's never spoken to someone as old as me. He hasn't spoken to Barr, and I said, "You got to be kidding me! It's not going to happen." And what we've seen on YouTube, folks, is the time spent. What do you call it?
The watch time. Yeah.
Time spent listening. We are humbled by how much time you invest with their show. I figured it'd be, 42 seconds, or maybe we get rich on Jobs Day and it'd be 4 minutes. But people spend hours here waiting for Lisa to talk about Eric Javits' hat for Melania. Are you going to go out, Lisa, and get the hat, the Melania hat?
I don't think so. But I'm just amazed at how far everyone comes from. Who's tuning in? From everywhere, from around the world.
It's shocking.
It's amazing.
It's in the international reach is.
Yeah, you have a global reach, people tuning in and watching from all around the world. You see it in the comments.
Is your office really at the Mandarin Hotel in Hong Kong? Is that you sit out at the bar there?
Yeah. It's the Conrad, actually.
Brian, what have you observed here quickly? What have you observed? What's been the biggest surprise?
The growth is incredible. Really, I mean, 100,000 subscribers is remarkable. This is not nothing. We also have a letter from the CEO that comes with the award too that you guys.
Nice. Neil.
This is an incredible award. Seriously, so much more growth to come. Year over year.
There you go, Paul.
Yep.
It's a Silver Creator Award.
Sure.
Absolutely.
Very good.
You probably asked Neil some questions in a sell-side meeting a few years ago. And really
All I can tell you is I think this internet thing's for real time. I think it's here to stay.
Well,
it's not a fad.
Seriously, folks, Sweeney's way out front on me on this, and I'm learning every day. We thank Ray YouTube. We thank Brian. We thank Lisa.
Exactly.
You guys are lucky we're all here today. Everybody's been on junkets, and the team, Bob Bragg, John Tucker. John Tucker, he's part of the team, right?
Yes, he is.
Absolutely. Special thanks, Damian Sassauer and David Gura, particularly for all of their efforts. We got, of course, our global technical director, Ken Fellio, and Rich Truman for keeping it going each and every day. We'll see you tomorrow. Bloomberg Surveillance. Lisa insisted we celebrate.
Let's all celebrate and have a good time. It's a celebration.